wealth has disappeared, but wealth will once again be recreated once the charges are found to be unfounded.
Mr. Ranina, Sajid here. Just to get a clarification, Adani Green has disclosed to the stock exchanges that that the complainant has prayed for an order directing the defendant to pay civil monetary penalties. So then it actually only is limited to the civil monetary penalties for alleged security fraud violation as alleged in the indictment, right?
Yeah. So civil penalties, of course, if you can compound them or you can, come to some settlement. But even then, the question is to impose those civil penalties, you have to prove the charges. And unless the charges are proved, the penalties cannot be levied in a court of law. Of course, they can also go in appeal to a higher court. So appellate procedures are also open to all these people who have been asked to pay a penalty. But I don't think any penalties have been crystallized so far. And once they're crystallized, then they are appealable. And if you want, you can settle them. So both options are available.
And the settlement process is something similar to what we have in India, right? For a SEBI consent process where you settle without, consenting to any.
Yes, you can settle without admitting that you have committed any offence. So that can be also done. That is possible, definitely.
Okay, thank you so much, Sanjay Asher, HP Ranina and Vineet Bolinjkar for joining us this morning as we're capturing that story. Agam now standing by with just an idea of, the impact that we've seen on the stocks and how very clearly now there has been misleading representation of what the facts of this DOJ case are.
So, the incorrect reporting of this particular issue has already led to a lot in terms of challenges with respect to the group. So, firstly, the whole group as a whole has lost out as much as $54 billion in terms of market capitalization. We know the kind of correction that we've seen in Adani Enterprises and Adani Ports, which are in fact a part of the Nifty 50. And even besides that, Adani Green, Adani Total, a lot of them have taken a big knock. More importantly, do remember in the latest, we've also had Moody's as well as several other rating agencies downgrade the company with the outlook turning to negative. This, of course, is also a significant reputational loss. But let's not forget the most important one, Adani Green, which was set to issue $600 million worth of bonds. They were withdrawn on account of this particular allegation, and this is despite the fact that the Adani Green has an order book of $2 billion, and the group had withdrawn these bonds so as to make sure that the investors do not make a loss on a mark-to-market basis. But that opportunity has also been missed, and we must remember this is the second time it's happened that Adani group companies have sought to raise funds, and then we've had these incorrect allegations come through. In terms of your partnerships too, while GQG partners have maintained that they're unworried about their positions in the Adani Group companies, they have also said, well, the group partners have seen a depreciation in their own holding in Adani Group companies, and it is also suggested that Jefferies, which in fact has been supporting the Adani Group company, but these allegations and these incorrect reportings have caused a little bit of concern with respect to their view on the group as well. So there has not just been monetary damage, but also reputational damage, where the group will seek some sort of correction here.
Agam, in fact, penalized, right? Because this is so unfair in so many ways. On one hand, the reputation has been tarnished. On the other hand, it's not just the group, but minority shareholders as well have lost significant wealth. But the good news is the stocks become extremely compelling. They come at a huge discount after the recent fall. And like Vineet Bolinjkar said, go out and buy the counters. So it is a blanket buy coming in on Adani Group stocks post the development of the latest news that we are getting in on the stock. Well, a quick detour now. Of course, we will talk about this in a little more detail when the markets open up for trade and we see the reaction of this on early minutes of trade. But it's going to be a market which would be rather boring. It could be a day of consolidation. A small positive bias is what's likely. It continues to be a buy the dip on this mini risk-on rally that we're currently witnessing. Avni Bhatt joins in from JM Financial with her top trades this morning. Avni, very quickly, you do have a bull call spread on BEL. You want to tell us what this is, because this is one space that has been euphoric post the outcome of the Maharashtra state elections. Modi trade seems to be back in style.
Good morning, Vimina. So yes, Bharat Electronics, it's seen a very nice rounding bottom formation on daily charts, and short covering is seen in futures. Good rollovers, around 59% already done, and we still have 2 days to go. December series 320 call is picking up traction, and for the November series, highest OI is at 300. So it may probably for next 2 days, it may not cross this level immediately. But the overall outlook is positive, and after say probably 3 or 4 days, it may start, it may cross 300 level and resume an uptrend up to around 320. So that's why we are going for a bull call spread and not a vanilla spread. I recommend buying December 300 call, closed at around 11 yesterday, and selling off 315 call at 5.5. So the net premium outflow is around 5.5. We can keep a stop loss of 3 and a target of around 10.5 to 11. So in monetary terms, it would turn out to be, if at all, the stop loss is hit, then the risk is about 7,000 rupees, while the profit potential is around 14,000 plus levels.
What about Oberoi Realty, Avni? You've got a strategy on that one too.
Yes, so the entire realty space has seen very good rollovers. In fact, it is one of the top sectors where the rollovers have been pretty good. Futures have witnessed a massive short covering of around 14%. And in this entire corrective phase since October, the stock has shown a lot of resilience and strength. It has maintained a close above 50-day exponential moving average all throughout. And on Monday, we've seen a good, strong recovery based on volumes also, and a positive RSI crossover. So it has moved above the congestion zone of 1965 to 1970, and follow-up buying was also seen yesterday. So rollovers are around 61%. So I feel the stock is ripe to test a new all-time high in December series. And since the view is extremely positive and a quick move, we are going for a plain vanilla call, that is December 2040 call. It closed at around 45, between 45 to 47 yesterday. Now, the strike selection is purely based on the liquidity that is there currently for the December options. So we are going for 2040 call. The target on the stock is around 2150 for the December month. So the target on the option price would be 90 rupees, and stop loss can be kept at 26.
Okay, thank you so much, Avni, for joining us. Those are the top F&O bets this morning, and Oberoi Realty in focus as well. But let's get to the big business of the day. Kush Bora joining us in studio, Mayuresh Joshi also with us. And it's going to be an exciting morning, perhaps. Kush, a little concerned or a little careful before expiry on Thursday. But then what would be the big call on the Nifty? Are you seeing another, rebound at least in the first half of trade?
First up, a very good morning. And as far as the call goes, it's fairly easy. Stay long. Or if you don't have a long position, go long. That's the kind of setup that we're seeing. Now, as you rightly mentioned, because of the expiry, there could be volatility, that could come to play. But as long as Nifty holds that 24,000, 23,950 kind of zone from the near-term perspective, I think we're in good stead. 2 good days of, an upswing, then a day of consolidation. And I think we'll take all of that. Plus, the PCR right now is also close to 1, which means there is plenty of room on the upside as well. Now, what are the levels to look at? 24,350 on the upside. Once that is taken on to 24,500 as well. Maybe expiry could perhaps play some havoc and some volatility, but on the whole, the setup looks very encouraging right now. So on the Nifty, I think if you don't have a long position, you could consider going long. If you do have, then you could perhaps move your stop losses to 2390, 24,000 kind of levels.
Chandan Taparia also joining us today, as is Mayuresh Joshi. Chandan, let's start with your opening call on the indices.
Good morning. Thanks for having me. So we have seen a nice rebound in last 3-4 trading session. Earlier, Nifty had corrected by around 3,000 points, and 38.2% retracement come at 24,444. That is the key level for market as of now. Above that, again, the bulls will be back on the track. But before that, till it doesn't surpass, we need to play the broader range in between 23,950 to 24,444. For intraday point of view, the gap which created 2 days back is an important level. So I'll go with buy on decline stance after the recent decline in the market, with the view that after the selling streak of last couple of weeks, FIs are back to some buying interest, and Bank Nifty started to hold the key support zone. So I'll keeping the support at 23,950 to play the upside move towards 24,444 in the Nifty index. Talking about Bank Nifty index, the good part is that from last almost 24 weeks, it has been respecting well a key support of 49,650, and this time also it turned from the same zone. It has been moving in between 50,000 to 52,500 zone from last almost 36 trading session, and now it's trading at the upper band of the trading range. So a small follow-up is required, and a decisive hold above 51,750 could see an attempt towards 52,500 to 53,000. So more gung on the Bank Nifty, with the view that this breakout could cheer on higher side, which can take the index to 24,444 as well. So keep these levels in mind and expecting some sort of buy on decline stance in the market as of now.
Chandana, buy the dip in this mini risk-on rally. 24,450 is the upper band, which is what the bulls will try to take out. And of course, a takeout of that level could take the Nifty all the way up to 24,800. But Mayuresh as well joins into the fundamental view on the markets. Mayuresh, it seems like everything has changed pretty quickly. You know, we kept talking about how this was a sell the rally, valuations are a worry, earnings are disappointing, FIs are selling, Trump is back. I mean, the list of reasons of why India was on the sell side were extensive. What we are seeing right now is a return of some strength. I am forced to believe this is more of a technical recovery as opposed to a change in fundamentals. Do you agree with me, or do you feel like the correction for now is behind us? And if you were lucky to buy last week, good for you. If not, you should be looking at accumulating right now.
Morning, Sarina. Morning, Kush. Morning, Chandan. So I think all the headwinds that you probably put out, I think they are still valid in the current context. And I think the base factor for the market becomes earnings. And earnings have been soft, except a few sectors and a few stocks within those sectors. Having said that, do we see earnings recover in Q3 or Q4? Seems to be unlikely, because the kind of consumption trends, specifically urban consumption in certain pockets, seems to be still under the pump. And that means that the overall earnings cycle might show some elements of recovery as we head into Q4. Obviously, I think with better monsoons this time around, rural recovery, rural consumption, rural discretionary spending has started coming back, as seen from the primary data points. Having said that, from a market positioning perspective, our own sense is that the markets might just consolidate around the current levels. So obviously looking out for cues, specifically on the geopolitical front, and what probably happens in terms of our own context, in terms of how Q3 earnings will play out. Having said that, Samina, again, I think certain pockets within the market in Q2, as Chandan just mentioned, the BFSI, certain NBFC stocks, have delivered strong set of numbers, and going by management commentaries, it seems that the sustainability in their earnings might continue over the next few quarters. Similarly, I think a few of the agrochemical companies have posted very good set of numbers, and again, with better monsoons around, the expectations in terms of both volume and value growth might actually sustain for these companies. A few of the infra stocks, decent numbers again, in my opinion. And there again, I think there are certain pockets of opportunities that do exist. And pharma as a pocket, surprisingly, is probably showing signs of strength as we speak. Therefore, my own sense is that there are pockets of strength within these markets itself, but the markets will largely consolidate.
Right. Gentlemen, stay with us. We're gearing up for trade. It looks like it's going to be a slightly positive start, but like Mayuresh said, while we might not be completely out of the woods, there are early signs of recovery that's currently underway. Technically as well, not looking too bad. We'll take a break, we'll come back, track reopen and continue our conversation and get stock ideas for you as well this morning.
Lotus Labs has seen very aggressive fresh longs on Friday. It has given a very good breakout on intraday charts as well. Plus, there's an option chain breakout above 500 level. So one can buy Lotus Labs on any small declines up to 510, keep a stop loss of 500, and a positional target of 535 to 540 can be seen.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360,
Welcome back. You're watching India Market Open. A quick check on how pre-open trade is looking. It should be a positive start, at least mildly positive is what we're expecting in early minutes of trade. There will be lots of stocks that will be in focus. There you go, as mild can get. 24,200 is being seen in the early minutes of pre-open trade. The Adani stocks will be your big gainers to watch out for. NTPC could be one more that you want to track in the session this morning. And of course, tech and banks become important again, or once again in today's trading session. Chandan, we're going into Market Open. You've already given us your view on the Nifty and Bank Nifty. Very quickly, your top trading ideas this morning. It is expiry tomorrow, so I'm assuming the markets will get into quite a bit of volatility. So any of your trades for December series would be great.
Yeah, so first I'll focus on the Nifty IT, which is doing well, has been outperforming the broader market. And I believe that most of the IT name will be in focus with fresh leg of rally. So Wipro will be my first preferred idea here. The stock has been making high top, high bottom on the daily and the weekly scale, and all set for a fresh multiple months breakout with its rounding formations. So Wipro can be first trade to buy with support of 577 for an upside target towards 620. Second idea that will be buy on granules. Nice pattern, has been consolidating from almost 50 trading session, and now it is all set for a decisive breakout above 600 marks. Already has been making high rise high lows from last 5 days and taken support at the lower band of the trading range near 525 marks. So one can buy with support of 580, and granules has potential to spike the momentum towards 625 to 640 zone.
Kush, what about you? What are your top trades this morning?
On the long side, first I've got Jyoti CNC. Now the stock's actually done rather well for itself in terms of the recovery that we've seen from the low levels, of about 1,000. Now, beyond the level of 1280, the stock could see, a bigger breakout. But up until then, also there is positive momentum, and as I said, the delivery volumes are also pretty decent. So 1275, 1315 are your targets from the near-term perspective. 1195 is where you place that stop loss. On the FNO side, I've got Syngene. Here too, we've seen very interesting moves on the long side. The rollover and the long build-up also is quite interesting on this one. So if someone wants to play, as you said, for the December series, then Syngene could be the stock that you want to look into. 930, 950 are your targets. 890 is where you place that stop loss.
Okay, one more story, big story we're focusing on, and IT will be in focus again. Just look at what is happening in pre-open before we get to that story with my colleague Haripriya. Cochin Shipyard in focus this morning, so the defense play continues and very much continues, 4% up. Vodafone Tata Tele moving again today, despite Vodafone putting out a notice yesterday saying that we have not got any details on bank guarantee. But the stock about 3% up in pre-open. We told you that M&M should be in focus. It's 2% up in pre-open. Macrotech once again firing. Angel One has got a mutual fund license, and they are going to start with passive funds. That announcement coming in today. HPCL, BPCL also doing well, and that's of course the crude impact. So crude impact is something that you could see as a momentary play pre-open. But let's look at Wipro and what Wipro is doing. Wipro has bagged a deal worth $100 million from Morelli. Haripriya is joining us with exclusive details. Yes, Haripriya.
That's right. Wipro has won a big deal. It's $100 million, according to the sources that we spoke to. Morelli is an automotive parts manufacturer based in Italy. Now, this is a 4-year extension deal. Wipro signed its first deal with Morelli in 2020. Now, this is important because of its quantum, and it's one more big deal in Wipro's kitty. The company, since the last couple of quarters, has called out that the focus will be more on getting big deals and focusing on deals that get them higher operating margins. The last big deal that was announced was for $500 million. That was from a US-based communications company. Now this is the second one. The company is right now is also in between its turnaround story, and has also gotten a fairly new CEO under which this under whom this progress is being seen. Deal wins largely for the sector as well as have been picking up, and Wipro is ordering well in this momentum as well. The macroeconomic environment is getting better, the demand is coming back, and in the last month, the sector as whole signed 60 deals. This particular deal for Wipro, in this partnership, it will be focusing on the cloud transformation and operational efficiency for Marelli. And Wipro's full stride cloud will migrate Marelli's Milan data center to the cloud.
Right, Haripriya, thank you for that. Wipro is going to be one to track. Siemens also, fantastic sort of earnings posted by the company. The stock is up 3.5% in pre-open trade. But let's quickly cut across the big story that we are tracking this morning on the Adani Group. Let's see and go across and hear over the former AG and senior counsel Mukul Rohtagi and senior SC advocate Mahesh Sheth Malani are saying as they address the media.
I want to tell you that these are my personal legal views. I am not a spokesman for the Adani Group. I am a lawyer. I have been appearing for Adani Group in several cases. So I have gone through this indictment by the US court running into some 54 pages. My assessment is, and it is clear, that there are 5 charges or 5 counts. It is very important to note that count 1 and count 5 are more important than the others, but in neither in count 1 nor in count 5 is Mr. Adani or his nephew charged. This is like a charge sheet. It charges individuals for doing specific acts. It is like a charge sheet under the Indian penal laws, that you charge somebody with a particular act, whether it is bribery, whether it is corruption, whether it is robbery, whether it's murder. So count number 1, contained in paras 124 onwards of the indictment, is against certain other persons minus the 2 Adanis. It includes some of their officers and 1 foreign person. That is the conspiracy to violate the Foreign Corrupt Practices Act. It is called FCPA. It is somewhat similar to the Prevention of Corruption Act in India. So the first allegation is that there is a conspiracy to violate the Foreign Corrupt Practices Act framed by the US Parliament. In that, the Adanis are not named, their officers may be named. That's 1. Then there are 2 or 3 other counts relating to securities and bonds. In those 3 counts, the Adanis and others are named. In the last count, which is a very important count, is a count relating to obstruction of justice. In that count, namely count number 5, the Adanis are not named, but their officers are named. So it is, maybe I made a mistake in count number 5. I made a mistake. In count number 5, obstruction of justice, the Adanis are not named, their officers are not named, but certain other people are named, including a foreign party. But be that as it may, the Adanis and others will respond to this charge sheet in the manner that they desire. I have not seen their responses. They will also respond to the stock exchanges in the manner that they desire. I have not seen or vetted any of these exchanges. These are my personal views which I have mentioned after having a look at this chart sheet. In the end, I would like to say something which has been troubling me, that when you look at a chart sheet, you have to be specific to say that so and so has done such and such act, so and so has bribed certain individuals, because this is a chart sheet alleging that these people, including Adani's, have bribed Indian officials in Indian entities relating to supply and purchase of power. But I do not find a single name or a single detail in the chart sheet as to who has been bribed, in what manner has he been bribed, and the official belongs to such and such department. This chart sheet is completely silent.
All right, that's Mukul Rohatgi, Senior Counsel and former ASG, speaking about the charges against the Adani Group in the DOJ and, of course, by the SEC. Just about a minute left for markets to open. A quick call from Chandan on the top stock after the pre-open has settled.
So yes, I'll focus on IT name with the view that Nifty IT is doing well. So I'll continue to be with Wipro with support of 577. I'll look for an upside target towards 620 marks.
Okay. What about you, Kush? One top call?
LTI Mindtree, and I'll stick with the IT pack. This was the BTST call yesterday. For targets of 6380, 6500, and a stop loss of 6110. LTI Mindtree still features on our buy list.
Okay. LTI Mindtree on your buy list. Mayuresh, we haven't really had a chance to chat. Very morning heavy news. Are you sticking with the IT call?
We continue holding Tamanna. IT names like Persistent and Cisco Forge in a portfolio, but a clear disclaimer, we have these holdings from relatively lower levels.
Right, Mayuresh, Kush, Chandan, stay with us. As expected, it's a flat start on the index. It's flat as it can get. 24,200 is what we have on the Nifty. Bank Nifty is also oscillating between gains and losses. As we see it, broader markets that outperformed yesterday, would be interesting to see what they are getting up to. The small cap index went home with gains of 1%. This morning, continuing some gains on the mid cap index, which is seeing outperformance, and the small cap index also trading higher. Like we said, it's a flat morning on the index itself. A quick check on the Nifty 50. I would imagine anything to do with crude becomes very important in today's day of trade. The breadth of the market is a 50-50 picture, so you don't have too many stocks. So there is no clear bias. In fact, the number of losers is outpacing the number of gainers, at least in the first couple of minutes of trade. Your biggest gainer is M&M on the EV launch. Brokerages are coming out and giving their views on what they think this EV launch could mean for M&M. You've got views coming in from the likes of an Antique that expected to over 20% upside on the stock. Coal India is looking good. OMCs will do well today and should do well for the next few days. It becomes a good trade, largely on back of the fact that there has been a ceasefire announced, which means that crude prices will come off quite sharply. What it means is OMCs, paint companies, tire companies, all that are key beneficiaries of crude will gain. NTPC, ahead of its subsidiary listing, NTPC Green, trades marginally higher. HDFC looks okay. Metals trades flat, but as you can tell, the breadth of the market is deteriorating. The number of gainers is dropping significantly as we trade out today. On the sell side, you've got Bharti that's lower, Adani Port still under some pressure, cement names are looking okay. Mixed bag really, metals also not seeing too much interest. So Tamanna, flat as it can get, broader markets are looking okay. But if you look at this, the breadth of the market's deteriorating. The number of gainers has dropped significantly as compared to what we started off only a minute ago. So no clear direction just yet, but I think consolidation is probably what it's going to be like.
Yeah, for some time, I think probably until expiry on Thursday, you're going to see that trend continue. We're just quickly looking at some of the sectoral indices, and we told you this morning that auto will be in focus because of a whole host of news, and we'll get to some of those auto stocks in a bit. Mahindra & Mahindra, of course, pumping that up on the back of their new launch. And Nifty IT, okay, just struggling to be there in the green. the big hit actually on FMCG stocks, FMCG healthcare reality. I would say broadly, yes, the breadth of the market turning negative and a bit of pressure there. But let's look at specific stocks this morning that we're talking about, because it's going to be about stock picking. This is a stock picker's market now, and you have to work very, very closely on it. Let's start with Siemens that we've been looking at and put all of those stocks one by one for you as we have discussed. Siemens, good numbers, that has worked for them. Vedanta is a newsmaker. They're moving out to Saudi Arabia for copper mining, but no big impact there that we are seeing right now. Let's move ahead with that list as well. Gulf Oil, because of a positive brokerage note from MK, has seen a bit of a bump up, but not massively either. Let's see more of those stocks, please. Zaggle has a deal with MasterCard coming 5% up on the stock this morning. So Zaggle in focus to some extent, but Lumax, Auto, Ola Electric, M&M, all up, and autos are definitely in focus. I'm wondering if we can pull up Hyundai as well. JP Morgan has initiated coverage with an overweight on Hyundai, and you know, for a stock that has been not really been given that much focus, this is the first time that you've seen this kind of a positive note. So 1.5% on Hyundai as well coming in this morning. So a few movers and shakers over there. I think Vodafone and Tata Tele are the other ones that we should see, because remember, as we told you on NDTV Profit, the cabinet is considering waiving of the bank guarantees that they owe, and maybe we could show those behind over here. In fact, these are the companies that came and said, Vodafone put out a note towards close of market yesterday saying that they haven't received any official consideration of this, and it was a sources-based story. But they continue to be in the positive, as does Tata Tele, which is zooming this morning about 5% up. So these are some of the movers. But yes, Samina, I think it's going to be a bit of a tough job to find big movers in the market today.
Highlighted most of them, but defense and shipyards continue to do well, so that Modi trade is still visible amongst a few names. Cochin Shipyard is up 4%. Siemens reported numbers that beat the street, which Taman already highlighted for you. Brokerages have liked what they've seen with the company in terms of earnings. Sirma is up 3.5%. 361 WAM is looking good this morning with a 4% up move. Jyoti CNC is having a positive morning. Macrotech, I think you've mentioned already in terms of gainers, up 2.5%. Aadhar Housing, Balrampur Chini as some of the other big movers in early minutes of trade. Pharma is having a bit of a mixed trade, but if I can just pull up a few tire companies and paint companies. Let's look at some of the smaller paint companies and counters like HPCL to see if there's a reaction to lower crude. Apollo Tyres not reacting yet, trading flat. HPCL is up marginally, up 0.6%. BPCL now turned negative. So this is interesting. You'd imagine that they move in conjunction with crude prices. That's what we've seen usually. We'll try and get a technical view on these OMCs in a minute. Aster DM also trades higher. On the sell side, GE, Veranova, which we'd highlighted for you, where the promoters are exercising green shoe option and selling an additional 2.5%. The counter sees a 5% downtick. Prestige is taking it to the chin with a 4% cut in today's day of trade. Godrej Properties, DOMS Industries are some of the other big losers as we see it. And BSC is also down 4%. Now that looks not too great in terms of trade. Chandan, anything that you've identified in the first few minutes of trade, and also while we're at it, I assumed OMCs would have it good today on back of lower crude prices, and so would paints, but none of them are reacting too well on the positive side. What are you making of them? Does this become an opportunity to go long, you think?
Yeah, so like first trade which I highlighted is Wipro, and then I'll focus on the Bank Nifty with the view that it can head to 50 to 500. With your in reply to your question on OMCs, I think we need to wait and watch, because most of the counter HPCL, BPCL and IOC are finding some supply at higher zone, and all these counters are trading below their key moving averages. Looking at Asian Paint, again here multiple hurdles with sustained cold writing is visible. So I'll wait for some decline to get some stability. But yes, positive view on the Nifty Auto, Nifty IT, and believe most of the IT stocks will do in this market scenario.
M&M, Siemens and Wipro.
So Wipro, I think Chandan's already highlighted, same view continues, at least from a trading perspective. I know it's on a very strong footing, so you could continue to stay long on this one. I don't know if you could initiate a fresh one because that 600 resistance will start acting. M&M, I've maintained for a while that if you've got a 3 to 6 months kind of a time horizon, you should buy into this. 3,200, 3,400 are the levels on the upside that you should look at. Trading, the momentum is perhaps missing for now, and hence you may not find it to be so lucrative from a trading perspective. But yes, positional trade from a 3 to 6 month perspective could actually be quite healthy. Siemens has also been a stock that we've discussed in the past. Good base formation around the 66, 6700 mark, but the risk reward ratio is not favorable if you're looking for a quick trade. Here to a 3 to 6 month perspective, where on the upside the target could be 8,000, 8,400 as well. And just a quick word on a couple of stocks that are doing well today. Zaggle is something that we had discussed last week for a second target of 480. It's locked into upper circuit around 490. If you've got it, don't be in a hurry to sell this one out. And Jyoti CNC, we discussed this for a target of 1275. It was hit in the morning, but now you're seeing profit booking. So perhaps closer to yesterday's closing, you could re-enter and hold this for targets of 1315 and higher.
Would you stick with your call this morning of go long if you haven't already?
On the Nifty, oh yeah, very much. It's just that, as I said, because of the expiry, you could see some volatility. In this case, perhaps it's acting, the exact opposite, which is you're seeing lack of volatility. Already been, 2 days of big moves. But yes, Nifty preferred long, Bank Nifty even more so.
Mayuresh, I don't know whether you track these companies, but I'm sure you do. What are you making of the recent news development on the Adani Group companies?
No, so I think what has transpired, Samina, largely in the morning should be sentimentally positive, and how this transpires is going to be extremely critical going forward. But I think a large part of the damage has been done. We've already seen the Kenyan government probably cancel contracts. You're seeing the Sri Lankan port acquisition come under some sort of a scanner. And question marks being raised again in terms of the local utilities as well. How do you recoup all this? Because I think the intent in terms of the capital raise plan for Adani Green in the US was specifically to probably fund these projects, which are capital intensive as well. And therefore, I think the measures that they put out in terms of liquidity coverage, in terms of their own balance sheet strength across their group companies, is a testimony on what probably now happens in the next few weeks. So again, I think sentimentally positive, but again, a wait and watch in terms of all these developments.
All right, thank you so much, Mayuresh, Chandan, and Kush for joining us this morning. And it's been quite a, I think, action-packed morning. In focus is also all of these statements coming in from the Adani Group and a clarification on what the charges really are. And the big clarification there, that there are no charges of corruption or bribery under FCPA against Gautam Sagar and Adani and Vineet Jain. So Deven Choksi, Managing Director of DR Choksi Investment Managers, joining us now for more on this. Deven, very good morning to you. Thank you so much for speaking with us. Just trying to understand and put this into perspective on how this will be viewed for the group stock-wise, as well as the allegations that have been made.
Yeah, good morning. Well, I think the clarification is coming up very at appropriate time. Maybe I think the allegations which have been made will probably reconsider, I think, all those aspects. I think the market will reconsider all those aspects against those allegations, largely because of the fact that if the direct involvement of the individuals are not there, and if it has been alleged, then probably I think that puts out, that takes away, I think, one of the major issues. And then probably I think one will have to see how the Department of Justice takes up the next level of allegations and how exactly they are dealing with it. But as of now, certainly this could be seen as a breather for the group as a whole. And though the fundamentals of the business and the companies, they do not get affected beyond the point. And I think that's where probably I come from, that if you have the clarity on the fundamentals of the business of the company, I think as an investor, you don't worry too much about those aspects.
Devin, just, on the view on the stocks, and you're seeing some recovery in the Adani stocks right now. Standard disclaimers over here, of course, and that will appear on your screen. But Adani Energy, Adani End, Power, Green, all of them now in focus. What would be your view on some of these stock prices that have been battered, and also for investors in these stocks because of the way news is presented every 6 to 8 months? You're seeing this huge battering for investors.
That's unfortunate, I agree. And because I think in every successive times, I think you are having one or the other negative news affecting the stock price and the confidence of the investors. That's really unfortunate. In my viewpoint, I think the business remains, I think, as usual for this company. The group level, 85,000 crore EBITDA visibility is there. 20% CAGR growth on that EBITDA is there. So that part, I think, is definitely very, very positive as far as the business outlook on the group is concerned. Individual companies, the stock prices have corrected significantly, and that provides the good amount of downside safety, the margin of safety as we call it as. It also definitely, I think, works well for those who are entering now as against, I think, those who entered at a higher price. In my viewpoint, I think this is a game where infrastructure business definitely takes time for giving you the return. And suppose if you are buying at a lower price for whatever reason in which I think this stock is available at lower price, that gives you an opportunity to make money in a due course of time.
Right, Devane, so would it be fair for us to assume that you would look at if you like the sector, this is a non-event, and of course the current opportunity becomes a good one to initiate investments into the Adani Group stocks?
True. I think since we have been invested in the group, I think we know how the infrastructure assets are working. I would think that I think this is an opportunity to buy into some of those. I think the correction in the price for Adani Enterprise definitely I think is a big opportunity currently. Similarly, I think Energy Solutions, Adani Energy Solutions, I think, which is a business which shows I think long-term growth visibility, that also is available at a corrected valuation. So it's an opportunity. So yes, I think selective companies within the group definitely remains opportunity. Even Adani Port remains an opportunity at the corrected price to buy into the portfolio.
Right. Thank you very much, Devane. Always good getting your perspective. You're an old hand in this business, so it's always valuable advice. Well, let's move on to another veteran in the markets. Manishi Ray Chaudhary, Chief Executive Officer of Emma Capital Partners, joins in. Manishi, hi, good morning. It's Amina joining in. I was going through a recent report that you put out on Reuters where you talked about how India has accounted for a significant $15 billion outflow in terms of foreigner money. Of course, the last 2 days have not been so bad. For reasons that may be more local in nature. How are you reading into the recent recovery of the last 2 days? Do you feel like there has been a significant change in investor sentiment when they look at India? Or do you feel like the risk reward now is turning favorable for our markets after this correction and the significant outflow that you mentioned?
Thank you very much. And thanks to your viewers for this opportunity. I wouldn't call it quite a significant change in the investor outlook, but certainly there has been a degree of, sort of enhanced interest in the Indian market after this healthy correction that we have seen over the past couple of months. India used to trade at almost 90% premium if you go back to late September compared to Asia ex-Japan valuations. That has now come down to somewhere around 55%. That's still high. I mean, the long-term average, last 10 to 15 years average is about 25 to 30%. So it's still trading maybe at one standard deviation higher than the long-term average. But clearly, the kind of correction that we have seen, and in particular, as far as the large cap opportunities are concerned, which are close to their long-term valuation multiples, that has engendered a degree of increased interest in India. Some of the fund managers, the investors that we regularly speak to, they are clearly taking a relook after having sold down India significantly over the past couple of months.
Manishi, let's talk about actionables, right? And I want to keep it local for a few minutes before we, of course, turn our conversation more global and relative to what's happening on Wall Street and what happens in the rest of the world. Do you see pockets of interest, value in the current setup? And if you do, which are these pockets that you're looking at closely when you talk about India? Consumption, I know, has been a bit of a worry point, but there's hope that the second half will look a whole lot better. Infrastructure spending is expected to pick up. And more importantly, at least what we've seen in the last day or two, is the Modi trade seems to be back in some fashion.
I would name 3 pockets of interest.
Okay.
First of all, financials, particularly the private banks. And this is something I've been harping on. if you look at both the short term and the long term, it's really the top rung private sector banks that are likely to gain market share significantly. The public sector banks still occupy about 65 to 70% of the Indian lending space, and that's clearly going to change going forward. Second, and this is relatively more near term, I would also talk about IT services. I think as a consequence of the geopolitical changes that we're seeing, as a consequence of the Republican sweep, India, particularly in terms of some of the select group of Indian exporters, could turn out to be, so-called winners in this environment. The US dollar has appreciated. That's also a short-term, near-term tailwind for the IT service companies. Third, I would talk about consumer discretionaries, both autos and two-wheelers. Autos over the long term, the four-wheelers over the long term, and two-wheelers in the near term, as we enter and cross the wedding season. And there's a degree of support to rural consumption that has also come through as a consequence of a good harvesting season, a good monsoon, which should play out over the next couple of quarters. So those would be my pockets of possible outperformance, both over the longer term and the near term. I would think that, you talked about industrials and infrastructure. That is going to be a theme that would be multi-decadal for India. If India wants to transition to, to manufacturing and exports, getting better infrastructure, there's really no alternative to it. And I think the government is going exactly in that direction. There are some stocks which are overvalued. They have corrected a bit, but, possibly investors would be better off buying them at lower valuation compared to where they are today. But it's really a multi-decadal theme that we would continue to focus on.
All right, thank you so much, Manishi, for joining us. Manishi Rai Chaudhary there. Multi-decadal story is there for India, but frankly, something I've been hearing for the last 20 years. What is the story right now is also what we're focusing on. Recovery, sharp recovery actually in Adani stocks. And there have been some new statements coming out from the group, on which right now there is a comment coming in from senior Supreme Court advocate Mahesh Jethmalani. Listen in.
We didn't prove that there was any conspiracy to bribe Indian officials to get these solar energy contracts. Kuch nahi hai. Nothing in the indictment. So, the Congress party is blindly relying on, an indictment against an Indian conglomerate which has done extremely useful business, undertaking useful businesses for India abroad, and it is trying to undermine them. It has succeeded in competition to get contracts for ports, etc., against many enemy countries of India. This is not in India's interest, and to blindly follow a US court indictment which gives no evidence and does not suggest that any of the Adanis or the company which issued the bonds, Adani Greens, have done any wrong in India. There is no, again I repeat, no case of any bribery in India in that indictment. Congress is reading too much into this indictment, and they are doing it for purely political purposes, and they have been aided, as is revealed by the timing of this leak, this indictment, by the democratic deep state. Now, this is a judicial order passed on indictment, but I regret to say that I don't know what evidence the judge who issued this indictment has acted upon. नहीं, देखिए, ये तो इंडिया ग्रोथ स्टोरी को रोकने के लिए एक साजिश है, उसमें कोई शक नहीं है. ये इसका जो टाइमिंग है, और आप देखते हैं कि जैसे भी ये न्यूज आता है अदानी के खिलाफ, हिंडनबर्ग द्वारा, अब ये इंडाइटमेंट द्वारा, हमेशा उसके बाद थोड़े टाइम के लिए अदानी ग्रुप का लॉस होता ही है. अब तो $2.4 बिलियन का लॉस जाहिर है.
Sir, you know that on the first day of the parliament itself, many adjournment motions were being given by the Congress party. Today also many adjournment motions regarding this particular issue have been given. You are a parliamentarian yourself.
I'm not a parliamentarian right now.
Yeah, but you have been a parliamentarian. But how do you see this? Do you think that there is a conspiracy of the foreign forces who are behind this? Because BJP have been alleging the Soros link behind the Hindenburg and everything. How do you see this, sir?
Isn't it manifest that you are repeatedly going after one corporate group, trying to embarrass the Prime Minister by saying that he is closely aligned? He is an industrialist who has executed many projects very successfully, both in India and abroad, in infrastructure, of which we should be proud of. Now, don't rush to condemn him blindly following a US indictment. You are behaving like the local agents of a foreign power that has an interest in stopping India's economic growth and undermining economic economic policies, our growth story, and our stock markets. And you indirectly affect the retail investors.
The opposition MPs have been constantly accusing government of cheating Dr. Adani, and they are insisting for a JPC in this regard. How do you see this demand?
Unless the Congress party puts out in the public domain credible evidence that there has been some wrongdoing in India, there is no need for any inquiry either by any authority in India or for a JPC. You please put out the evidence. You can't blindly follow without application of mind. You only want to create some kind of noise and disrupt Parliament. This disruption of Parliament on such, it's not even flimsy evidence. It's non-evidence. There is no evidence. This is completely unwarranted. देखिए, जो इंडाइटमेंट यूएस कोर्ट ने किया है अदानी ग्रुप के खिलाफ, यानी उसमें काफी नाम्स हैं, लेकिन उस इंडाइटमेंट में ये नहीं बताया गया है कि भारत में कौन से कानून का उल्लंघन हुआ है. उस इंडाइटमेंट में ये नहीं कहा गया है कि किसी को भी, कोई भी पब्लिक ऑफिशियल भारत में को घूस मिला है अदानी ग्रुप या उनके ऑफिसर्स द्वारा. वो स्पष्ट है, आप इंडाइटमेंट पढ़िए, उसमें नहीं है. इंडाइटमेंट सिर्फ ये बताता है कि एक साजिश था और उसके बारे में भी कोई सबूत नहीं है कि ये साजिश था ब्राइब करने के लिए, लेकिन उसके लिए भी जैसे मैंने कहा कोई भी सबूत नहीं है, कुछ भी नहीं है. कांग्रेस पार्टी अंधविश्वास के आधार पे इसको यहां पे एक इशू बनाने की कोशिश में है. कांग्रेस पार्टी को कम से कम, मैं नहीं कहता हूं कि यदि यहां पे कुछ रॉन्ग डूइंग हुआ है, कुछ गलत कानून का उल्लंघन हुआ है अदानी ग्रुप या उनके ऑफिसर्स द्वारा, कि अथॉरिटीज को या जेपीसी को स्थापित नहीं किया जाना चाहिए. मैं सिर्फ इतना ही कहता हूं कि पहले आप सबसे पहले सबूत पेश कीजिए, उसके बाद देखना चाहिए कि ये सबूत काफी है कि नहीं.
And my colleague Tanushka Datta spoke to former AG and Senior Counsel Mukul Rohatgi also about the finding of allegations.
See, madam, generally the charges seem to be that Adani company called Adani Green, which is in the business of supplying solar power, was bribing officials, unnamed officials, of certain unnamed power companies, purchasers in India, and the idea was to get lucrative contracts for supply of power. इसके लिए bribe दी गई, किसको दी, कहाँ दी, कितनी दी, ये कुछ नहीं है इसमें अभी. और क्योंकि इसमें अमेरिकन इन्वेस्टर्स हैं, अमेरिका की स्टॉक एक्सचेंज में इसका शेयर लिस्टेड है, इसलिए वहाँ की इन्वेस्टिगेशन ये दिखाती है, ये इनके खिलाफ चार्ज है.
Right. What do the charges specifically, say at this point? What are the charges against Adani's?
It is not specific at all. I told you, अगर मुझे आपको घूस देनी है और आप किसी कंपनी में हो तो मुझे आपका नाम तो देना पड़ेगा. तो ना तो आपका नाम है, ना उसमें पैसा इन्वॉल्व है, ना लिखा है कितना दिया और कौन सा कॉन्ट्रैक्ट मिला, कुछ नहीं लिखा है. जनरल है. अब या तो जनरल है या उनके पास और इन्फॉर्मेशन है, वो बाद में दी जाएगी, वो मैं कह नहीं सकता. लेकिन इन कागजों में कोई घूस लेने का नाम, पता, अमाउंट कुछ नहीं है.
In which counts are the Adanis named and not named?
Counts 2, 3 and 4, the Adanis are named. Those counts relate to allegations of conspiracy in securities, namely shares which are listed in the US.
Right, and count 1 and 5, sir?
1 and I told you 1 and 5. One is conspiracy to violate the Corruption Act, and count 5 is obstruction of justice.
Right.
उन दोनों में नहीं.
Right.
Right, Chakri Lokpriya, Managing Partner of Red Strawberry LLP, is joining us for more on the story. Chakri, how do you view the developments?
Yeah. Good morning. I think they are completely frivolous at this point in time, simply because the charges talk about an event that could have happened, and now after that so-called event, which did not happen. A number of companies, Moody's rating agencies, have evaluated the company. IDC has, did due diligence for funding the Adani ports. So all these companies must have done their due diligence, and none of these allegations came forth at that point in time. So at this point, I think we're making too much out of nothing at the current point in time.
So what would be your outlook on the stocks? Because, at the end of the day, and something that Mahesh Jetmalani was also saying, investors are the ones who are suffering. There could be whatever reasons behind this, whether it's politics, it's the legal system, it'll take its own time, etc. We don't know till the facts are not out. But the fact is that then investors suffer. You have some recovery today, and there is a recovery in Adani Group stocks. But what is the outlook on these companies as an investment call?
From an investment outlook on the many of the Adani Group stocks is very strong. Adani Ports, they're the nation's leader in infrastructure of ports, and not just nationally but now becoming internationally. Adani Enterprises is a holding company. Adani Green has significant plans with or without foreign partners in renewable energy. So the list goes on, and therefore a company involved in such large infrastructure projects with cross-border funding, and all those funders would have done their own due diligence. So which means now to rely on some report seems to be a bit too much out of nothing.
Okay, thank you so much, Chakri Lokpriya there on the big story that we're tracking this morning. All right, let's shift to another very interesting conversation, and we have with us Manav Chopra, Director and Technical Analyst, Nuvama Institutional Equities. Manav, great to have you on the show, and thank you so much for joining us. Just let's start talking about what's happening with the Nifty. Definitely bound in a range. Are we now in oversold territory waiting for the next breakout?
So what we've seen recently is the first leg of the correction, from its recent highs, and more than 11% correction done in the markets. My sense is the market has bottomed for the short term, not necessary for the medium term perspective. And we have reasonable evidence suggesting that, the markets, the lows that we formed last week more or less should hold. And from here on, you will see a trading rally to emerge. We've already seen the first leg, from 23,300 levels closer to 24,100. I think the markets are just taking some breather at these zones, and eventually we do expect extension on the upside. Now, on a very short-term basis, with the expiry also this week, once market starts to sustain above 24,300, 400 levels, I think we expect a move towards 24,700, 25,000. I think that is where the retracement of the recent decline would stop, and then we would reassess the situation. But largely, we still stand with the view that we are still in a medium-term corrective scenario where the first leg of the correction is done. But in this phase, we are just viewing this move as a trading rally, and then we would reassess at maybe at higher levels.
So you talk about the first resistance zone, 24,000 to 24,100, which is where we are right now, Manav. Now, the question a lot of our viewers would have is, what is the call that you take? Do you wait for Thursday expiry to go through and then take fresh positions on Friday? Or is this the right time for a longer play?
We do anticipate that, in the current scenario, the upside resistance would be violated. I think when we are looking at the market structures, particularly how Bank Nifty or IT is positioned, I think IT has largely outperformed. But, how Bank Nifty is currently consolidating, I think a move beyond 52,500 would actually get some bit of a strong momentum and good push for the Nifty in general. So, Bank Nifty has already seen a good rally from its recent lows, but consolidation near its resistance. I think the next leg would be supported by banks. My sense is with private banks, obviously, which has been quite supportive, PSU banks would start to fire. So likely speaking, we have already recommending selective longs in the banks. Also, the PSU banks looks quite favorable. And with that scenario, once Bank Nifty starts to break above 50 to 500, there is a possibility of a 5% kind of trading rally, which could get markets closer to 25,000. So the next sector looks quite reasonable, and within the Nifty basket, we have already seen how IT banks are supportive, but other sectors will contribute in case of any short covering.
Okay, so which are the sectors that could contribute in case of short covering? You spoke about IT, you spoke about banks. These have seen a stable run-up in relative terms. What are you seeing on the potential side? Is it autos? And autos rallying today, from an M&M to an Ola to Hyundai, everyone having their day in the sun?
So the maximum price hit that we've seen in the recent fall was the autos and FMCG in general. I think the price pain in FMCG more or less is done. The sector at best might just consolidate or try to form a base, but within the space you might see an odd short covering rally. For me, autos is in a mixed bag. It is still going to be largely consolidating, but certain stocks within autos will do well, like your M&M, Eicher Motors, Hero Motors, and that matter. But we are not very constructive on autos or FMCG. But these are the spaces within the large caps which are due for some bit of a trading rally or a bounce. With that, I think market needs to sustain above 24,300 in a very short term to add fuel for some short covering or a fresh momentum leg. I think the only advantage that we've seen in the recent bottom formation was that the mid and the small cap seems to be getting into a comfort zone. The breadth has improved. And a lot of stocks are now sustaining above its the short-term averages. So my sense is that this breakout should play out on the upside, and we will see an extended rally. So within that space, obviously the high beta like real estate looks quite well positioned. We are quite upbeat with the PSUs as a theme. I think that is one space that has seen a lot of decline, which are bound for a short covering or a quick trading rally. So PSUs, IT would be my preferred bets if I have to play the next trading rally along with banks.
Okay. Just one last bit. So you're sticking to banks, you're sticking to, I think, the big names right now. But what are you seeing the Nifty close this calendar year at? Manav, I'm just trying to understand, are you going to be seeing this kind of a consolidated range-bound level for the Nifty till December 31st and then maybe a breakout post-Jan?
So the immediate expectation is that Nifty maybe in the month of December should be close to 24,700 or northwards of 25,000. That's my immediate understanding. Largely, Jan, Feb, too early to anticipate, but we would want to assess the situation how December really goes by in terms of market construct. But my medium-term theme remains that you will find a lot of headwinds and resistance at 25,000, 25,200, and unlikely that market will see move beyond that on the immediate basis until unless we have any big catalyst coming from the other scenario, which currently market is not pricing in. But we are only looking for the markets as a near-term trading rally, but the investment deployments would be done only at the lower levels.
Just one last point from you, Manav. In the SMID universe, if you had to pick 2 or 3 winners that seem poised for a breakout after being oversold quite a bit, where would they be? And would some of them be, for example, in your defense, railway space, which have been ignored for a while? Or are you seeing those with, order book focus? Just trying to understand what you're liking right now.
Okay, so my sense is largely, I think the PSUs as the basket, which has been in a corrective decline since early July or mid-July, they have already witnessed a 6 months of decline, which definitely includes names like defense, railways, shipping, select metals. I think the PSU as a space in general has bottomed out or at the fag end of bottom. Certain sectors, my senses are bottomed out within the public sector is your defense and your PSU banks. So we are recommending clients to start taking medium-term, long-term positions in the PSU banks along with defense names. And maybe any more jitters in the markets ahead, we would be assessing this sector very, very closely. I think the next to bottom out should be happening in your shipping along with railways. But that bottom out might take a while. The stock or the sector to consolidate. Unlikely that we see a very good bull surge coming in, but more or less, we are at the lower end and the fag end of the stage where things looks comfortable. Beside the public sector space within the split, my sense is in the chemical space, which the sector has been in a good underperforming or a downtrend since last 2.5, 3 years. And quite an underweight in the general market theme. So, this is also one sector which has very limited traction. And my base case is that we've seen some subtle accumulation playing out. So with the PSUs and chemicals within the SMID basket, I think this is an interesting zone where risk reward looks very favorable. And we would be eyeing these sectors for taking some nimble long positions.
One favorite from each.
Okay, so to start with, from the chemicals, it will be Navin Fluorine. The stock has been showing very, very good accumulative patterns, currently priced at 3,400. And, it is forming a good inverse head and shoulder pattern on the long-term charts. And I don't see the stock go below 3,200. So maybe we have a good bandwidth for accumulation, but largely we anticipate a 20-25% kind of a rally coming in. And the sector has been quite beaten down from the public sector. From the large cap, I like BEL, and from the mid cap space, it will be BDL.
Okay, so BEL, Navin Fluorine, these are some of the picks from Manav Chopra. Definitely add those to your list. Manav, thank you so much. Always a pleasure to chat with you, and thank you for joining us today on NDTV Profit. We're going to take a very short break, but before we head into that break, quick check on what's happening with the markets. I mean, real struggle there between the bulls and the bears. One sectoral index which is in the green is the Nifty IT. Look at what's really working. Ola Electric zooming today, Zaggle zooming today. So these are some of the gainers. You're seeing a sharp recovery in Adani stocks as well. This morning after the statements that have come up from Adani Green and from the company saying very clearly that there is no criminal indictment under FCPA charges against Vineet Jain, Gautam Adani and Sagar Adani. So some reaction coming in there as well. We'll take a very short break. On the other side, we're focusing on the new kid on the block, NTPC Green. Are we going to have listing gains? If not, what should your strategy be? We come back with an expert view after this very short break.
Laurus Labs has seen very aggressive fresh longs on Friday. It has given a very good breakout on intraday charts as well. Plus, there's an option chain breakout above 500 level. So one can buy Laurus Labs on any small declines up to 510, keep a stop loss of 500 and a positional target of 535 to 540 can be seen.
When the whole day passes like a blur, The news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Welcome back. It's NTPC Green 7.5%. This has beaten some of the most optimistic grey market premium numbers that we had seen, and this is much better than what the street was expecting. NTPC Green is the third largest IPO in the current calendar year, and of course, the excitement and euphoria was there for everyone to see. It was oversubscribed 2.4 times and is a significant player as India undertakes its energy transition business. And more importantly, remember, India is the fourth largest in terms of installed renewable capacity. What you also want to keep in mind is that 17% of that installed capacity does belong to NTPC Green. In other important news that we woke up to this morning, just hours before the stock list as we see it this morning, what we also heard about is their joint venture that was announced with the Maharashtra State Energy Department. This, of course, is an important development, pretty much in line with what was expected, where future expansion for NTPC Green would be secured through MOUs and joint ventures with PSU and private players. So significant in every way. The listing is good. It's up about 7.8%, better than what the street was expecting. It is an expensive stock. Valuations are stretched. It does have a high debt on its books, but net, Tamanna, this is much better than what we were expecting in the last few weeks, right? You've got a big smile on your face.
I've got no NTPC Green
interest,
allotment. No, I'm just saying that it's good that it has listed better, and I think part of the reason could be how LIC has come in and actually completely bolstered their subscription, because their subscription was languishing a bit till the second day, but third day, as happens, has come in as well. We'll run some of those pictures also on part of our screen where you have all the management coming in and posing with the opening bell. That's always nice. But Nikhil Nigania is with us. He's director at Bernstein and tracks the stock closely, the space closely, and also has a note out on NTPC and NTPC Green. Nikhil, very good morning to you. I think the target price is 440. Are you, first of all, positively surprised with the kind of listing gains? I mean, 7.5%, but it was expected to be 3 to 4%.
No, you're right. So in terms of coverage, we cover the parent NTPC, and hence from that lens, we look at the renewable business. And to your question, are we surprised? We are a bit, given if you look at the grey market premiums where they were till a day back as well. But on the parent, we are positive. And the renewable business per se, we think the potential they have is great due to a few aspects. Such as a cost of debt advantage, number one. They can borrow much cheaper than private sector peers. Second is an advantage they have on the receivable side. The receivables, they have a tripartite agreement with the Reserve Bank of India and the states, which helps them get better receivables than most private sector players. And the third advantage they have is access to capital from the parent, which is something which gets diluted a bit with the separate listing. Hence, we were not in full favor of the listing separately. But the parent, we are positive, and the overall potential, we think in renewables, what they have is great.
So Nikhil, just to follow up on that, you are positive about the parent, that is NTPC, not so much about the listing NTPC Green. So just the direct question for whoever has got the allocation or is thinking about buying in right now, is it a good idea to do that or not?
Unfortunately, we can't comment on the specific green listed entity given we don't cover it. And hence can't give a valuation lens on it. But from a fundamental perspective, given we cover the parent, we think the renewable business, they have a lot of potential to grow and be one of the biggest renewable players in India, given the points I mentioned, cost of debt, receivables, and access to capital.
Let's then talk. Hi, it's also Samina joining in. Let's keep the focus on NTPC and talk about what you've put out on your note. What, in your opinion, are the primary factors that are causing the recent volatility in power demand, and how do you expect these to evolve in the near term, and what will the impact of this be on NTPC?
You're right. So a big concern for the sector the last couple of months, which we think should be downplayed, but the stocks have become soft, is power demand, right? So last 3 years in India, power demand has been phenomenal. It's grown at 8-9% CAGR. Compared to a 5% CAGR, which we saw most of the last decade. That has been a key contributor to the rally in the power sector stocks. But if you look at the last 4 months, the way they have played out, July to September, then October, and even November till now, demand has been almost flat YY, as against a trend of 8-9%, which I spoke about earlier. The reason why this happened, we think in the July to September phase was monsoons. Rainfall this year was significantly higher than the average levels. And a low base. Last year, we had a deficit in rainfall. So those are the reasons why, and power demand is very weather dependent. Temperatures drop, rainfall is excessive, power demand drops, which is what we think contributed to this slowdown in power demand. And we expect the longer term trend of 1x of real GDP growth in power demand, which is 6-7%, should come back. It's only a question of time.
Right. So, Nikhil, beyond, okay, with midterm demand also aligned to 1 times real GDP growth, what structural drivers or risk could alter this relationship, in your opinion, in the second half of this financial year?
Yeah, if in terms of risks to this demand story, in the near term, again, weather is something which is unpredictable. If again we see cooler temperatures, then again demand is unlikely to grow fast. And second is economic activity. So we have seen some soft data coming from other industries as well related to consumption. So part of it again obviously contributes to power demand. That's the other factor. I mean, broader economic activity and weather. Those are the 2 things I would highlight.
Nikhil, I know while you don't want to talk about NTPC Green specifically, but from an NTPC lens, right? Why does the IPO valuation of over 1 lakh crores now, of course, that 7% cap up on the stock, exceed the inherent value of 70,000 crores? I mean, what, in your opinion, even justifies this premium? Is it just the fact that it has a parent that is NTPC? I do understand that it has 17% of India's installed capacity. India, of course, is the 4th largest installed capacity in the world. So, in your opinion, those valuations do look stretched to me.
So, from a fundamental perspective and a thematic perspective as well, I can see 2 reasons why the interest is there in the stock. One, as I said, having a parent like NTPC, which is a central government-owned sovereign kind of an entity, they borrow, for example, at 7.5-8% interest rate, versus private sector peers borrow money at 9.5% interest rate, and renewable business is 80% debt funded. So if you borrow 100 to 100 basis points cheaper than a competitor, you have a big advantage going and bidding for the same projects which a private sector is bidding for. So that is one big advantage which they have. The second reason for the interest is thematic as well, right? I mean, not just NTPC Green. If you look at all the listings which have happened in the renewable space in India, whether it be, again, names we don't cover, but Wari, Premier Energy, there's been good interest in those names because renewable as a theme, given the strong government push towards 500 gigawatt renewables by 2030, and not many names to play that, there is an interest in the name.
Nikhil, now, of course, we've talked about the valuation of NTPC Green, but how significant is the holdco discount on NTPC's valuation post-IPO? And how might this affect shareholder value? And also, do you see the stock price stabilizing post the IPO now, which was probably the biggest trigger for NTPC as well in the last couple of months?
Yeah, so holdco discount, again, is a debatable point. So in our scenario analysis, so our target price for the parent is 440 rupees. And even if at current stock price, we give a 20-30% holdco discount into the parent, it doesn't move the target price much for us. I mean, looking at the screen, I think numbers it's at, it could only inch it up a bit, even after the holdco discount, if it sustains at these levels.
Thank you. It was good talking to you. Always good to get perspective on NTPC, while everyone seems to be focusing on the listing of its subsidiary NTPC Green. I think the more important talking point becomes NTPC and what this really means for the parent in more ways than one. But great having you. Have a good day and we'll speak to you soon. Well, that is a little bit of coverage on NTPC, the stock, and NTPC Green has opened with a better sort of response than anticipated. Remember, this is an expensive stock, but despite that, the markets are seeming excited and picking up the counter on listing day. 118 is what we have in terms of NTPC Green. Well, in the meantime, a quick check of how the markets are also doing. It's not a bad day of trade. It's pretty much what we expected. It's another morning of consolidation, but this comes in after we've gained over 3.5% over Friday and Monday. The breadth of the market is what sort of disappoints me a little bit, but it's more or less a 50-50 picture. On the winning side, like we called it, the stock of the morning's got to be Adani Enterprise, and that is what is contributing to the Nifty, up about 3.5%. Bharat Electronics, which is what Manav, I believe, was constructive on, Tamanna tells me, is also seeing a 2.5% gain. Tata Motors, Tech Mahindra, IT is in good step this morning. Power Grid looks good too. NTPC, if I can pull that one up and see what it's getting up to, it's up about 1% odd. On the sell side, Pharma and defensives, consumption was a gainer yesterday, but today taking a break. So your counters like Britannia, ITC, Asian Paints, ICICI Bank, RIL are some of your key losers. In the broader market, GE Vernova is down 5% on back of that green shoe option being executed. Prestige Estates is having it rough. Poly Medicure, Oil India are looking quite bad in trade. On the gaining side in the broader markets, it is shipbuilders. It's the Modi trade that continues to remain in focus. Garden Reach is up 6%. Bharat Dynamics is up 5.5%. Adani Energy is up 5%. Cochin Shipyard is up 5%. Adani Power. So the whole Adani pack is seeing gains anywhere in the range of 4 to 8% each. So all in all, a relatively decent morning, we would say. Well, we also have another quick check-in coming in from our research team, where JP Morgan has notably initiated coverage on the recently listed auto giant Hyundai, and Puneet is standing by to tell us more what JP Morgan thinks. Puneet, JP constructive on, I'm going to call it Hyundai because that's how I call it. It's over to you.
Well, thanks for that. So yeah, you can pick your pick on how you want to call the name Hyundai, but they have a target price of 2,200 on the stock. It's about a 16 to 17% upside from the current levels. And they are putting 3 key points in this particular report. The first one is that the premium portfolio market share gains as well as operating efficiency are the 3 key points going forward of the company, and that they're very positive on. They're maintaining that 68% of Hyundai's sales are coming from the SUV space and majorly from Creta as well. So that's another key positive on the margin side, and that's one of the key reasons as well that we mentioned in the IPO, that its margins are higher than somewhere like a Maruti Suzuki as well because of the same. The second part is that market share gains are also expected going forward with new launches such as the Creta EV in Q4 of FY25, so somewhere between January and March of 2025. And apart from that, they are looking at multiple new refreshes as well going forward. Finally, they're estimating that the market share will go from 14% in FY25 to about 15% in a couple of years. And what's interesting is that the EBIT to the total per vehicle is around 89,000 for the company, which is a 43% premium compared to its peers. So it's expecting that the margin play is going to be very strong, and valuations are very cheap right now at around 18 to 20 times. They have the target price of about 2,200 is based on Hyundai being valued at 25 times FY27. Which is in line with peers such as Maruti Suzuki, but the margin profile is high. So overall, it's a big positive coming in on Hyundai. Another initiative coverage, another buy with a target price of 2,200.
It's not just Hyundai which is in focus today. It's auto stocks which are also in focus, M&M and Ola Electric as well. But what are brokerages saying about M&M?
Well, definitely it's a big positive. Finally, the electric vehicle launched by the company, and brokerages, while there are mixed views on valuations, the common theme is that it's the very positive EV launch. Specifically, Nuvama, they maintain their target price 3,700 rupees per share, 21% upside from the previous close. They say that the new EV platform, dedicated EV platform, the Inglo platform is what they call it, is a big positive because it can lead to multiple launches going forward as well. They've said that major features such as a larger battery, higher range, as well as fast charging is some of the key positives about the vehicle that is launched yesterday. Bookings open from January 25, and what's interesting is that they mentioned that the capacity is around 90,000 units. There's roughly 2 months of sales for the company that's added onto a new platform. Nuvama is estimating that in the first year itself of FY26, they might be selling roughly about 48 to 49,000 electric vehicles. That's a big growth driver going forward apart from the existing portfolio. MK, while they have a target price of 2,700, a downside actually a 9 to 11%. That's clearly just led on valuations because their point is that the SUVification, so as to say, is slowing down compared to the last 2 years. They've also mentioned that while the introductory price of the electric vehicle is 6% and 22% for both the models, lower than the peers as well, it's very competitively priced. But they say that the EV category has some slow offtake, and as I mentioned, the SUV is slightly on the slower side. So they are expecting that the EV industry will have a lot of launches, so competition will be there. But Mahindra's new launch, definitely a positive. Valuations, according to MK, might be something that you want to watch out for.
Valuations is the other part of the story. Thank you so much, Puneet, for speaking with us. And let's get to our talking point conversation this morning. Pramod Guppy, Marcellus Investment Managers in studio with us. Pramod, great to have you, and always great to have a conversation in studio. So thank you for dropping by.
No, thanks for having me. It's always a pleasure.
All right, let's start talking about your view about what's happening right now in the markets. And then, of course, we'll get to what segments you like or what your mood is. Are you feeling optimistic right now? cautiously optimistic, or in that zone where you're saying let's sit on the sidelines?
Well, I think the answer is in the nuance, like always, right? I think the long-term macro is fairly intact. I don't think there's any doubt. Of course, there is cyclical slowdown in certain sectors, but that's part of the deal, right? I mean, economies, businesses, markets always go in cycles. Nothing moves linearly. To that extent, I think that given we are long-term investors, we're quite positive on the macroeconomic fundamentals. Yes, we would like the markets to be a little cheaper than where they are, particularly the sort of stocks that we like in quality. We did see some hope with the sort of correction we've seen in the last couple of months. I hope that correction sustains and gives us opportunities to buy into great businesses from a long-term perspective at reasonable valuations.
No, so you don't think valuations have come off enough? Because you're saying you hope the correction sustains. Trend lines are pointing to perhaps a recovery from here on.
So I don't know. I mean, it's futile to predict markets in the short run. I've tried to do this for the last 20 years. Honestly, I can't do it. I haven't met anybody else who can do it. But to the extent that we have the luxury of taking long-term calls, I would rather wait for more reasonable valuations, more from a fundamental perspective. I'm not talking about whether tomorrow you'll get a better price or not. But looking at earnings and long-term earnings growth potential, I do think that you'll need a little more margin of safety before you can say that I can start buying now.
And if, from whatever it is worth, we have borrowed returns from the future. We've had a phenomenal run despite the fact that we've corrected. And even if you look at those FI numbers, they're not even taken off a little bit profit off the table, right? With the kind of wealth that they've created and generated by allocating to India in the last 1 year. But Pramod, let's get down to actionables. We had a very rough October. We had a very rough November as well so far. What were your clients doing? Have they doubled down on their allocations in India? Have you picked up the phone and said, you know what, if you've got money on the sidelines, bring it on? Or are you still waiting?
We're still waiting. In fact, a lot of the global institutional allocators have clearly done their homework on India, and clearly,
they're telling you to wait.
Not really. They're asking us. You tell us when should we, press the button. We're saying wait.
Why is that?
Like I said, at the end of the day, I mean, you're saying markets are down 8-9%. Isn't that enough of a correction? But look at it this way, even earnings are down 8-9%. So multiples haven't changed materially enough. There are two outcomes. If you think that the earnings are going to be strong enough, hopefully you will outgrow those multiples and multiples will become attractive. But right now what we are seeing is the other way around, where earnings weakness has meant that despite the correction, markets haven't become any cheaper. But like I said, leave aside the shorter term, even from a longer term perspective, some of the quality businesses, we would like to see more sensible valuations before we can bang the table and tell our clients, this is the time to buy India. And I think they are on side with that. We've got long history of starting valuations having an impact. Like you said, you borrowed returns from the future. The fact that we've had a great run over the last 3-4 years means that from this point on, we should be prepared for relatively lower returns. Of course, there'll be pockets of the market which will do better, which has been the case over the last decade as well. Say 2020 to 2020, between say 2G and COVID, you had a fairly muted market experience, yet there were sectors and stocks which did remarkably well. But that's our job as asset managers to identify those.
No, you're right. And you talk about earnings. I mean, India is shown single-digit earnings this quarter. Second half, hopefully, looks better, but the US has got double-digit growth. So the mother market will continue to be the hotspot for investors. But you talked about how this is a stock pickers market, bottom-up approach is what most asset allocators would be doing. But in your opinion, which sectors have been affected most in the recent correction? Are there any pockets of value or interest that you're seeing?
I think private sector financials remain perhaps the only pocket of
HDFC,
value.
ICICI
banks, banks and a few NBFCs which are quality, which have corrected over the last couple of months.
What about capital market players?
Capital markets players are cyclical. Yeah, no, absolutely. Look, structurally, we're very positive because I think we built Marcellus to capitalize on the structural trend of financialization of savings by Indian households. Historically, Indian households have been very heavy on real estate and gold. It's only over the last decade or so there is conviction building in financial markets, and therefore you're seeing the flood of money coming into mutual funds, PMSs, AIFs, and several other financial assets. And that trend, I reckon, is multi-decadal. Having said that, this is not going to be a linear story. Capital markets are cyclical by definition. I don't know where we stand in the cycle, but given the trend over the last 3 years, you'd reckon earnings are on the higher side. They're certainly not trough earnings. On top of that, the market is giving multiples to these capital market plays at a premium. So you're buying into them at premium multiples at what could potentially be peak earnings as well, from a cyclical perspective. If you were to take a longer term view, of course, you will still make a lot of money from capital market plays. But like I said, we're all greedy. We would want these great companies available at cheaper valuations.
In the long term, we're all dead also. But just last point, Pramod, there you talked about capital market play, but if you were to identify 1 or 2 sectors that you think are ripe enough or close enough to valuations where you feel fresh money can come in, what would those be?
Yeah, hands down, it has to be private sector banks, right? So where we've seen an element of quality still intact in terms of asset quality. I mean, you're investing in a lending business, that's perhaps the foremost thing. And they are cheaper than historical valuations.
Just a quick 10-second answer. What are you feeling about export-oriented sectors? So pharma and IT, because the Trump party and the China tariffs could work well for us.
Yeah, I mean, IT and pharma are perhaps one of the few sectors where you have some earnings visibility. Earnings visibility is important, particularly when valuations are high. By no measure, pharma and IT are cheap on an absolute basis. But relative to the rest of the market, given the earnings certainty and predictability, I reckon those would follow private sector financials in terms of our pecking order of sectors.
Okay, so financials, IT, pharma, and in financials, private sector banks on top of the heap. Always a pleasure to speak with you, Pramod.
My pleasure.
Thank you so much, Pramod Guppi of Marcellus here on his top ideas on Talking Point. With that, it's a wrap on India Market Open, but stay tuned. Ask Profit up next.
Laurus Labs has seen very aggressive fresh longs on Friday. It has given a very good breakout on intraday charts as well. Plus, there's an option chain breakout above 500 levels. So one can buy Laurus Labs on any small declines up to 510. Keep a stop loss of 500 and a positional target of 535 to 540 can be seen.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. This show gets you answers to all of your stock-related questions. And we've done things a little different this week. We've been taking your questions on WhatsApp, but we've also opened the phone lines so that you can speak to us directly. And that number that you see on your screen, that landline number, is where you can call and speak to me directly. And of course, we've got a fundamental expert and a technical expert joining in just very shortly to tell you or give you the answers to all of your stock-related questions. There are several questions that have already come through on WhatsApp, and we'll get to that in just a moment. But let's take a look at where the markets are right now. It's been very range-bound for the benchmark Nifty 50, and you have almost an unchanged sort of a move right now. And look at that. It's a very, very tight range at this juncture, but holding very close to that 24,200 mark for the benchmark Nifty 50. Let's take a look at the broader markets as well and see where they are right now. And you have the mid-cap index that's trading just about flat at this juncture, but in the green, and the small cap index that's up about 0.6%. So, of course, we look at some of the underlying securities, and let's take a look at the contributors on the Nifty 50, because there are a few stories that emerge despite the kind of range-bound action that you have. You have NTPC, which is up and is proving to be the top contributor on the upside, and you also have HDFC Bank. But the Adani companies that are part of the Nifty 50 are actually leading gains. So you have Adani Enterprises that is up about 3% even at this juncture, and several of the other portfolio companies also gaining ground on the back of a clarification that was sent out by Adani Green earlier this morning that said that both Gautam and Sagar Adani were not charged in the DOJ, the Department of Justice indictment that took place earlier in terms of a violation or conspiracy to violate the FCPA, which is the anti-corruption law, and they've also not been charged in the obstruction of justice. What they have been named in is a civil charge, and that's a completely different scenario altogether. So there has been a little bit of misrepresentation in the run-up to today, and that has been reflective in the stock prices. And of course, all of that has been taken into account, that clarification, and the stock prices are up and about in trade today as well. Another factor that we've been focusing on at the start is a new listing, of course, NTPC Green, and that is what we chose as a focus today. So incidentally, if you've got questions on NTPC Green, do call us. If you missed out on this IPO and you're wondering whether or not to deploy at this juncture, that is what we should be addressing at the start. Incidentally, I'm joined by Mihika, just to give you some perspective on what the assets are for NTPC right now. Mihika, let's not go into all of the details, but let's talk about where things stand right now and what the roadmap is for the assets going forward. How will capacity increase?
Yes, thank you, Alex, for that. You know, the IPO listed at a 3.3% premium, but it's gained so far up 13%. A little bit about the company is the renewable energy arm of a listed company, NTPC Limited. It has an operational capacity of 3.3 gigawatts, almost 14 gigawatts of contracted and awarded projects, and 9.2 gigawatts under the pipeline. Now, in the next, and from FY25 to FY27, management has stated that they will commission 3 gigawatts in FY25 itself, 5 gigawatts in FY26 and 8 gigawatts in FY27, and they target a 19 gigawatt capacity by March of 2027 and a 60 gigawatt capacity by 2032. Lastly, when you talk about strengths and risk, parent company supports strong past experience are strengths, but key risks include construction delays and cost overruns.
Okay, all right. Thanks so much for getting us those details. In fact, we spoke with the management. Let's listen to a small slice of what they had to say to NDTV Profit.
we're now in conversation with the management of a newly listed company, NTPC Green. Now, the IPO stood at a total issue size of 10,000 crores. And to speak about the road ahead, we're joined by the Chairman and Managing Director of NTPC and NTPC Green Energy, Mr. Gurdeep Singh, as well as the Director of Finance, Mr. Jaikumar Srinivasan. Welcome to the show and congratulations on the listing. Let me start off by asking on how the 75% of the proceeds will be used for debt repayments. How will these debt repayments be carried out forward?
Good morning. Yes, we have indicated about debt repayment initially. Broadly, this 10,000 crores would be utilized for capital expenditure only because we have a huge capacity addition planned up. But on a more immediate basis, when we mop up this money, we'll be retiring some of the debts on the balance sheet, and subsequently when the capital expenditure happens, we'll have to again go for the fresh loans.
Got it.
There is, of course, the entire interview which will be available on all of our platforms later in the day, but I don't want to delay taking your questions any longer. So let me introduce you to the experts who are going to take all of your questions today. We've got Vaishali Parekh, who's Vice President Technical Research at Prabhudas Lilladher, as well as Sameer Dalal, who is from Natvarlal and Sons Stockbrokers. Thanks so much to the both of you for taking the time. Sameer, very quickly, I'll come to you on NTPC Green. What's the call that you have? If you missed out on the IPO, would you suggest entering at a price that is 13% higher than the listing, than the issue price?
Honestly, no, I don't think I'd be in a rush to invest. Look, this is a great long-term story, development for renewable power in India, NTPC being the largest player, expanding its capacities. Your analyst has already discussed the fact that they have a target of 16 gigawatts by 2032. Now, all of these things take time to set up. Then, like they said, there are cost overruns that will happen, which could affect the profitability. So I'm not saying it's a bad investment. I'm saying it's a good investment, but is it a good time to buy it at a 10% up price about today? I think you can wait. I think the issue is quite large. You also got to realize that because of the large capexes that they have lined up, at some point in the near future, they're going to have to come in for another round of fundraising to ensure that their balance sheet remains healthy. So I think there will be enough opportunities to buy it. I would not be rushing into buy it today itself.
All right, let's jump straight into the questions that we've got. I just want to remind you, if you're logging in, you can call me directly on that number that you see flashing on your screen. Prakash from Chennai has got the first question today. He has about ₹1 lakh that he wants to deploy right now. And this one's for you, Vaishali. On the charts, he's looked at 3 companies in a similar space. There's Transport Corporation of India, there's TCI Express, and there is Concor, which is Container Corporation of India. And he's looking at which of these has the best probability to give decent returns from this current level. He's okay to wait for a better time to deploy. Which would you pick?
So, well, currently, I think Concor is very well placed. It's seen a good corrective move. And technically, if you ask me, 760, 770 was a very good support level. And we are seeing a bounce coming. But however, having said that, still there is a lot of upside from here on. So I would suggest Concor to start accumulating with 760 as support.
All right, so Concor is a pick there. The question is from Surya, the next one, and he's asking about gas stocks, GAIL as well as GSPL, and wondering what the long-term prospects are and whether they should be bought at this point. He's writing in from Bengaluru. Sameer, on the fundamentals, would you say that you would pick either one of these two?
So GAIL, so we don't have GSPL under coverage, so I can't comment on that. GAIL is something that we are positive on. Look, at the end of the day, the gas supply within the country will only keep increasing as city gas distribution keeps increasing. CNG also, although it's becoming non-favorable at this point of time given electric vehicle focus, we believe that business is still going to be able to grow because it's still more competitive than the ICE engine. So from that perspective, I think GAIL looks good. Volume growth over the next few years. Operations will keep getting better as more gas flows through their pipelines, which will play the increase in profitability. So we have a positive view on GAIL and one could invest in GAIL. But is it the top pick in the market at this point of time? No. But if he's wanting a gas stock, then yes, GAIL is a buy.
I believe we've got our first caller of the morning today. Devi is tuning in from Hyderabad. Devi, good morning to you. And how can we help you today?
Thanks for accepting my call. I want to know what is your view on Tata ELXSI stock for a long term, and also if there are any long-term stocks to invest. Please tell us.
Okay. So before I take your question to the fundamental expert, Devi, I'm just curious. Tata Elxsi, what caught your attention? Why did you pull up this particular stock?
The reason why I have pulled up is that the semiconductors part, which has pulled up my interest. So Tata is actually is in joining with Taiwan's semiconductor companies. So I'm expecting there will be some growth, even though the semiconductor is one part in this Tata ELXSI, as well as there are some artificial intelligence improvements which are coming in this company. So I picked up this stock. I want to know the view for long term.
Okay, and have you bought already, Devi?
Yeah, I have bought a few. I have 7 shares at 7,200, but now the stock is at 6,700, I believe.
6,800, yeah, it's recovered somewhat.
Yeah,
but
yeah,
I got your
yeah.
question. Thanks so much for logging in. Let me take this question to you, Samir. Obviously, Devi's done some reading, and there is a fundamental basis on the back of which she has made her investment. Unfortunately, the stock has given up a little bit of ground since she bought it. What would you suggest her approach should be, and what do you think about her thesis when she invested in Tata Elxsi?
So I'm glad she has done some amount of reading before investing. It's good to hear that. Congratulations to her. So we do have a positive view on Tata Elxsi as well. From a long-term perspective, I'll tell you, the businesses that they're doing, which is in the auto side, which is in the AI side, which is also what they're getting into, will all bear fruits over a period of time. Where I think, the stock had probably run up far more than fundamentals. I think it had made a high of almost 9,000 plus. And from there, we've seen a stark correction. So now what we are in is a consolidation. The earnings need to start catching up, which is obviously going to happen. We've seen a bit of a flat line in the earnings in the last 2 quarters. So once maybe the earnings start seeing an uptick, you could see the stock price moving up. But we believe that the consolidation could continue for a little bit longer, maybe another 3 to 6 months. I would suggest that, given she's not bought it at the extreme high of 9,000 plus and just around 7,200, on any dips, she should add on an average a bit. Like I said, we are positive. We believe the stock price should trade at about 8,000, 8,200 in a year's time. So continue to hold on.
Continue to hold, Devi, is the view from Samir on Tata Elxsi. Zomato is the next counter that we're talking about. Manu is asking whether or not it should be bought for the long term, fresh at this juncture, 287. As a stock that has been on a tear, absolute tear. Vaishali, there's also fundraising that it's undertaking. So that's going to be something that is in focus as well. The stock is up and about in trade today as well. Would you suggest a fresh entry at this point?
So I would not say at these levels, but we did get a chance when the market was dipping. But I would say wait for a dip or start accumulating, because long-term projections, what we are looking at from here on, it's around 320 to 340, and 260 on near-term basis acts as a very good support. So my view would be to start accumulating, because exact bottom fishing won't be possible. We're already seeing a bounce. So if you get at lower levels, add more, but one can start buying from here on.
Okay, I'm coming back to you on Jupiter Wagons. Praveen has got this next question. He's writing in from Hyderabad, and he's bought at a price of 572. He's wondering whether to hold or sell at this juncture, and if you can provide him with a stop loss.
So yes, Jupiter Wagon, actually we saw overall all rail stocks were beaten up to quite an extent, but and so is the case with Jupiter Wagon. What we saw, the high of around 650 to now at around 450 levels. So my view would be, if time period is not a problem, I think start adding more, because with a longer term perspective, once the stock moves above 520, there will be further more conviction for a further high move going towards 550 to 600 levels. So I guess just hold on and buy with the stop loss of 400 levels.
All right, Mithilesh, I believe, is tuned in, and he's called from Hyderabad. Mithilesh, good morning. I believe you've got a question for us on NTPC Green.
Yes, sir. Good morning, everyone. So I got NTPC Green Energy around 850 stocks at IPO pricing, and what's the like you said, this has good amount of returns for now, but for long term, should I be holding it or should I book some profit and wait for it to come down and add more in the dips? Like, what's the strategy for next 2 to 3 years?
That's a good point. We've already taken a fundamental view, Mithilesh, on NTPC Green from Samir, but let me just take this specific question on whether you should take some money off the table. Samir, it's an interesting point because this is one IPO that has certainly given a pop, and it has already given up a little bit of ground from the high point. So would you suggest taking some money off the table? It's not a very large amount. So is there a significant benefit to taking money off the table and deploying later?
So if the person has a 3-year view, I don't see what's the reason to take money off the table at maybe like a 7% upside, right? Or 10% upside from where they've currently bought it. I think it's a long-term play. I would suggest this is a stock that could get added, but at lower levels. Honestly, if you ask me, I found the IPO slightly on the expensive side. So I would have liked to see the pricing around closer to 90 rupees. So if you get a dip around the 90 rupees, I would say add on. But should you sell? Probably not, because I don't know if we'll get that 90 rupees. And if you are a 3-year investor, which the question is, then I don't see, I mean, I see the stock moving up, quite a bit. So trying to catch the tops and the bottoms is not the right strategy if you're a fundamental long-term investor. So I say stay put.
I'm just pulling numbers out of my memory. Hopefully I'm right, but the pricing of the IPO at 108 was 256 times the FY25 price to earnings, if I remember correctly, which is not cheap to say the very least. So point well taken, Samir. Question from Vijay, who's writing in from Chennai, and asking about Dr. Reddy's Laboratories from a 6-month perspective. Vaishali, is this a good buy at the current level if you're considering a fresh buy at 1,200 levels?
I'll just have a look.
Yeah. Let's, in fact, while Vaishali is looking at it, let's pull up the longer term charts to see how this is done in the year so far. And it is up about 6%. So like the rest of the pharma pack, in fact, among the larger frontline companies, not having done too much. Vaishali, you have a view?
Yes, I do. So I would say a long-term trend is still intact. Keep a stop loss of 1140. And I mean, overall, I think pharma sector should continue to do well. So I guess from here on, it is a stop loss of 1140 and look for a target of at least 1300 from here on to start with. Once it crosses 1300, we can have a relook, and then we may have a projected target of 1350 to 1400. So for at these levels, I think nothing much to lose. Hold on.
Okay. All right. I'll take one more question, and then Atul is called from Bengaluru. I'll come to you, Atul, in just a bit. But we've got a viewer who has written in asking about BPCL and whether it is a good long-term buy. He's already gotten an average price, I believe, of 300, which is not too far away from the current market price. Do you have a positive view on this, Samir?
So honestly, I'm not a big fan of the oil marketing companies, but also given the fact that refining margins have probably bottomed out and could start moving up. BPCL also has the refining business, which can continue to do well going forward. So the probability is the stock could probably move up closer to the 330 levels in the next 1 year, although that's not our target price. I mean, we still believe we're not very positive on the overall businesses because of one, government interventions that come in from time to time, two, because this business is eventually going to start seeing a decline once the electric vehicle side of the business picks up. So growth may not be as great. It will take time for all of these things to play out. But if you're a long-term investor, I think if you get 330, take your money and get out, find better investments to make, because I don't see long-term growth in the counter. If you're a trader, I mean, I'm sure you can probably trade in and out because the stock is going to move within a range between, I think, 260 to 330.
All right, comprehensive view on BPCL. Hope that answers your question. Atul from Bengaluru has called us. Atul, good morning. You want to know about CDSL and you've bought at 1,440. First of all, is this a long-term buy that you made?
Thanks for taking me in. So CDSL, I bought it just before the bonus is issued. And that it is basically long term. On top of that, if I can add one more,
yes.
I bought Netwave Technology, which I bought it at 880. So I'm basically looking for long term. So in case you want to share some views.
We generally, Atul, sorry, but we generally stick to one stock per viewer because of the time constraints here. So let me take a question on CDSL. You wanted to know about Netweb, but there's another question that has come through, so I'll take that probably over the course of the next half an hour or so. CDSL for the long term, bought at levels of 1,440. Samir, on the fundamentals, would you hold on to this? He's handsomely in the green right now.
Well, I think he said he bought it at 1,440 before the bonus issue. So
Yes.
maybe if you do the adjustment of the price, it would probably be even lower. So I think the profits will be even larger.
Yeah.
But having said that, look, this is a business that that doesn't require further capital, right? It's a duopoly business, NSDL and CDSL. Now, there's a lot of talk of the NSDL listing coming in the next 6 months to a year, or even sooner maybe than 6 months, but it's expected in the next year, and that could lead to some amount of de-rating. CDSL is the largest player in the space, and in India, if you ask me, the number of demat accounts are growing and will continue to grow because there will be further investments. Plus, if you talk about the fact that you're going to have insurance moving in, coming into like a demat kind of a format, then to have all of that, you will find new account being opened, which will lead to revenue generation for CDSL, of course. So operational leverage is quite strong. Growth opportunities are quite strong. Where we find a bit of discomfort is valuation. So what could probably happen is the stock could go through a sideways movement to a slight correction. But if you are a long-term investor for 3 years, I say stay, hold on. The valuations will, the earnings will catch up with valuations, and then you could probably have another run also to higher levels. But like I said, only valuation concern, otherwise it would be a buy.
13% just over the last month. Atul, hopefully that answers your question. Ria has got a question on good intraday stocks. Anything that looks attractive to you, if not intraday, then from the shorter term perspective? And there's also a clarification that she has sought on C2C, the SME IPO. Of course, the regulator stepped in. As you know, if you've been on the website ndtvprofit.com, then you will know that the IPO was cancelled, and the regulator has stipulated that the money that has been collected during the IPO process must be given back. So if you have subscribed, you will be getting your money back. Vaishali, on the shorter end of the spectrum, would you see anything that is interesting?
So, well, I would not be so aggressive at this juncture because, first of all, market is vulnerable to, we are approaching the expiry of the future contracts. But having said that, there are few stocks which are technically very well placed, especially today. We have seen a good pickup coming in Exide Industries. Overall, all these battery stocks have taken a good beating. So one of them is Exide. That would be a recommendation. My trading strategy would be with a stop loss of 420, look for a target of 450. Among the cement category, we are seeing Ramco Cement has been an outperformer and it is sustaining above the breakout levels. So have a look at that with a stop loss of 960 and look for a target of 1000. And if he's looking for a slightly positional trade, then I think Maruti and India Mart are they have not performed and they are pretty much close to the bottom. So these make a very favorable risk-reward wise trade as a positional trade. So these would be for a slightly longer period, but the other two, what I mentioned, is for a shorter term.
All right. Thanks so much, Vaishali, for that. Do we have time for one more question before? Okay, so we have to slip into a very quick break. Vaishali, as well as Samir, do stay with us and we'll come back to take more questions with you. Viewers, we'll be back after this very quick break. Do stay tuned.
Laurus Labs has seen very aggressive fresh longs on Friday. It has given a very good breakout on intraday charts as well. Plus, there's an option chain breakout above 500 levels. So one can buy Laurus Labs on any small declines up to 510. Keep a stop loss of 500 and a positional target of 535 to 540 can be seen.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Log Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. Welcome back. You're watching Ask Profit on NDTV Profit, and this show gets you answers to all of your stock-related questions. We've thrown open the phone lines over the last few days, and we've had the opportunity to speak to a few of you. I've been very, very happy with the kind of questions that we've gotten so far. Let's see if Ram from Chennai has got a similar question. Ram, thanks so much for holding the line, and thanks so much for calling me this morning. How can we help you? You have an investment in IndusInd Bank, right?
Yeah, thank you so much for this program, and this on-call is really helping. I've been watching this program with WhatsApp for almost a month now. It's very helpful for a layman like us who is trying to learn. So you are giving very valuable information for investors like us.
I'm glad to hear that. I'm glad to hear that.
Yeah, so on the IndusInd Bank, yes, I bought it mid last year, wherein the private sector banks were doing good, like along with the KVB and this and City Union. With a long-term perspective. And now, off late, I'm seeing that, a lot of public sector is picking up while private sector is lagging. So what is the strategy that I should do here? Should I hold this IndusInd Bank with a long term of 1 year plus, or average it, or exit?
Okay. Ram, just a few follow-up questions so I can understand why you have picked up IndusInd Bank. This is based on the fundamentals that you have chosen to buy IndusInd Bank?
Yes, it was. Like last year mid, it was prior to the election results. It was really with the deposit ratio and the loan ratio were really good. So considering that, I've invested in this along with a few others like IDFC First and Karur Vysya Bank.
Got it. Understood. Samir, I'll come to you on the fundamentals then. He's bought at levels of 1,140. The stock is currently trading just above that 1,000 mark. But off late, you've seen a little bit of trouble on the loan book side in terms of delinquencies, and IndusInd Bank has not been able to miss out on that or remain unscathed in that. So would you say that he should continue holding or are there better plays? He already has IDFC First. If I remember correctly, you like IDFC First. I'm not sure if I'm right.
You're absolutely right, Alex. I like IDFC First, but I also like IndusInd Bank, right? So let's be honest, IndusInd Bank has not had that much of a rise of NPA that, the street has hammered the stock down by over 40%. And I think in the last, not 40, maybe 30% in the last, say 2 months. Now, where the problem lies for them is they have reduced their loans towards the microfinance segment, which is the high yielding book for IndusInd Bank. That is the Bharat Financial side book, right? So when that happens, your higher yielding interest earning assets go down, your NIMs compress, and which is what happened in the current quarter. What they have also done is they've taken an enabling provision for any risk to the microfinance book that could arise over the next 3 to 6 months. So that they don't have to provide aggressively when the actual loans may turn default. They not necessarily they will, but they could. So they've taken a bit of provision. Now, the street obviously didn't like that. They didn't like the fact that the NIMs have come under pressure because that means the guidance that the management had given obviously will not get met. So I agree that yes, a correction could have come, but not maybe this large. I believe the microfinance business will continue to grow over time. It'll take another 3 months, maybe another 6 months before it bottoms out and stabilizes and bottoms out. But you got to remember that IndusInd Bank is not only a microfinance lender. They're also lending to other businesses. They have housing finance loans. They have the jewelry business where they give a lot of loans. They have the auto vehicle financing, which is the biggest part of that portfolio, which is continuing to grow. So look, they will be able to scale up some of the other businesses, although this part of the business may struggle. So for me, it is a buy. The valuations are very, very attractive. Disclaimer, I have been buying at these falls. So maybe there is a slight bias, but I am very, very positive. I think somebody should hold on to IndusInd Bank. Now, coming to the second part of the question which you asked, Alex, is IDFC one of my topics? It is my topic in the mid-cap banking space because of the growth that they're able to do, not only in deposits, but also in the loan book. And they are very, very aggressive in provisioning. So, they have provided there's a certain part of the book that that is a little overdue. They have provided 90% of that as provisions in the last quarter. So even if they turn NPA, he's more or less done with all the provisioning that he needs to do. So now what you're going to see is profitability increase. And if those don't turn into NPAs, he's going to be able to write all of that back. So according to me, IDFC First Bank valuations, again, very attractive. So both of them are a buy. But since the question was predominantly on IndusInd Bank, I say hold on and buy an average whenever you can.
Yeah. Good thing is that he holds both, Samir. So point well taken. Ram, hopefully that answers your question. We've got a quick question that I want to take from WhatsApp, and this one's for you, Vaishali, on HAL. Hindustan Aeronautics and quite a few of the defense stocks are up and about in trade today. Sarita from Hyderabad has bought at levels of 4,556. She's got 34 shares, and she's wondering whether to sell at this price because she's seeing a bit of a loss, not too much as these things go, but she's looking for a stop loss as well.
If you are a trader, of course, you need to check the levels minutely. Currently, what we are seeing, it has seen a good run up right from 4,000 levels to now. So technically, I would say there is a resistance at 44.70. But once we see the stock moving above that, I think it's ready for further higher targets to 4,600 and 4,800. So depending on your time horizon, one may take a call. And as far as the stop loss is concerned, well, it comes pretty low, 43.20. So that is the near-term stop loss. So hold with a stop loss of this. And I would say actually overall full defense sector, to call it BEL, BHEL, HAL, in fact, even the Garden Reach and Cochin and Muscat, they are all doing very well. I would say these are the stocks that one should keep in their portfolio for a longer term perspective.
All right. And as you pointed out, the entire space is buzzing today. I promised one of our callers, I can't remember exactly who, but I said that we would look at NetWeb Technologies because we've got a question from Chandan and he managed to get allocation at IPO stage and the stock has done pretty well. It's gained quite substantially from that point. Hopefully, Samir has a view on this. Samir, the question is, would you take money off the table if you've got an allocation?
Sorry, I don't have coverage on it, so I request you take it to a technical.
Do you have enough to talk about this, Vaishali? NetWeb Technologies currently? Yeah, okay.
Yes, in fact, today there is substantially a good volume. I would say hold with today's low as stop loss, and I think it's in all likelihood it's ready for, it did make an attempt for a breakout. So it's ready for a breakout, and if it sustains at about 3,000 levels, this could probably go to 3,200 also. So keep today's low as stop loss and continue holding. There is nothing wrong with the chart. In fact, it's above all the cluster of moving averages. So right now it's showing strength.
I believe we've got a caller from Chennai. Bhaskaran is joining in. Bhaskaran, good morning to you. I believe you've got a question in the banking space.
Yes, good morning. Among the Canara Bank and Indian Bank, which one is better for the region of 1 year?
For 1 year, okay. And you haven't bought either of these right now, right? Just clarify.
Yes, both I am holding. Both I am having. I wanted to invest some more in among these two.
Understood. Okay. So let me take your question, Bhaskaran, to Vaishali on the charts. He's holding both of them, as he's pointed out. I do not know exactly what price, but the question effectively is, if you were to deploy more at this stage, which of those two would you pick?
So, well, I would say overall, full PSU banking sector has shown good corrective move. And chartically, if you ask me, both are on similar pattern. So I would say, well, distribute your stocks in both, money in both these stocks. And once the PSU sector starts moving, you will see rotational move coming in almost all these stocks. So I would say my view would be to add more in both.
Add more in both. All right, that's a view. VL E-Governance and IT Solutions is the name of the counter that we're looking at. Unfortunately, it's a very small company. Market capitalization of 1,600 crore rupees. And Harjeet has got a question. She's Harjeet has bought at a price of, oh no, not even giving me the price, of 400 shares. Any chance you have a view on this, Sameer?
Sorry, again, no coverage on this one.
Do you have enough to talk to us about this, Vaishali, on the charts?
Sorry, come again. It is, you said VLEGOV, right?
Yeah, that's right. Yeah, it's gained quite substantially in the year to date, as much as 132%.
I would say keep a trailing stop loss. Right now it is getting into a consolidation. We saw some profit booking. So the near-term stop loss which one can look at is 145. If it goes below that, then it can get into a negative territory. But the range right now would be 160 as resistance and 145 as stop loss. So either ways, the view gets decided. If it goes above 158, 160, it's ready for further up move. But if 145 levels break, then it's time to exit for some time.
Okay. We've got another caller from Hyderabad. Shweta is joining in. Shweta, good morning to you. I believe you want to know about the railway space?
Yeah. Good morning. Very good morning.
What specific? Good morning.
Yeah.
So what specifically would you want to know?
Yeah, actually I bought all the Titagra, Texmaco, Jupiter wagons. All of them are around 25 to 30% loss. I'm holding them. As I can see, again they have started picking up. Should I wait till I cover my losses, or where can I exit and book little losses?
Okay. Just a clarification, Shweta. When you bought it, did you think that you would hold it only for a short time, or did you buy it based on the fundamentals of the stock?
Actually both.
Okay.
Because as I can see huge development in the railway sector right now.
Yeah.
So, and the order book of all these three stocks is very good.
Yeah. So,
and I think the momentum is also very good when I bought them, but as you know, suddenly all the stocks took a hit. So
yes.
I just want to know whether they can recover all the losses, 25 to 30%.
Yeah.
Can we see upside from now, or should I book losses?
And just a quick clarification: if the advice to you were to be to hold, how long can you hold it for?
Maybe probably 1 year I can hold. No problem.
1 year you can hold. All right. So Sameer, it's a tough question for you. Whether or not a recovery of 30% is possible, not necessarily a tough question for you. You probably have an easy answer to this, but more to do with the stocks that she's invested in. Maybe a tough ask, would you say, 30-35% in a year's time?
Yeah, I think it's a very tough ask to get that kind of recovery, if you ask me. Look, we do not deny the fact that the whole railway push by the government of India is seeing a lot of traction. You're seeing order flows very strong, or good order books for these companies. Execution for the next 2-3 years is comfortable. And going forward, also, we believe that a lot of these companies, maybe for the next 5 years, will have no problem with order inflow and execution of a lot of these things. But the problem is valuations had run up far ahead of what fundamentals justify. So it's more important now for the earnings catch up to happen, which will take a year's time plus. So you'll see operational efficiencies for all of these companies come in, because as the volume uptick happens, the gross margins, which are quite strong, will eventually start trickling down into the profitability. So I'm not denying the fact that it's good, but if you're asking me, am I going to get a 35% upside in any of these counters which are trading at about anywhere between 40 to 50 times earnings? Very difficult for a fundamental analyst to say, yes, it's going to happen. So for me, although the person is making a loss, I think there are better opportunities where valuation comforts are slightly better. You could probably consider booking a loss for the time being and entering these stocks when they correct a little bit more. Because I'm expecting the valuations to come off a little further as well. We already know that government spending has been a little slow in the first half, which is expected to pick up in the second half. If it doesn't pick up on the railway side to the extent that we are expecting, maybe then you could see the stocks coming off. So I would say at the moment, one can book some amount of loss and maybe find something else. But would I expect a 30% return? No, I don't.
Okay. Do remember, from a tax perspective, it's not always a bad idea for you to take a loss sometimes. You can actually set that off against capital gain if you do book that, and there's quite a bit of that. We can take that up at a later date. But let me get to the next question. It's on Vodafone Idea, and this is a question coming in from Satesh, who's writing in from Puducherry, I should say. He's bought at levels of 11.18 rupees per share, and he's holding as much as 25,000 shares. This is a tendency to buy a significant quantity of a relatively low ticket price share. But Vaishali, on the charts, he's already undergoing quite a bit of loss despite the kind of recovery that you saw in trade yesterday. Would you say that he should hold on?
I would not think so, because actually it's in a downward trajectory. And well, with yesterday's gap up opening, I would say just take a chance, because now that he's holding, continue holding. Exit around 859 rupees, because I don't see much of a trend coming in over here.
Okay, Satish, so that was Satish's question. Amara Raja Batteries is a question that is coming in from Mr. G.S. Dutt, who's writing in from Eluru in Andhra Pradesh. He's looking for a short to medium term outlook. He's bought at a price of 1,270 just a few days back, and he's looking for a technical view. Vaishali, on the charts, how does it look?
Recommended Exide and Amara Raja also. So I think they are both on a similar pattern. And I think now that auto industry is totally going down, good correction coming in. But these are the levels I think market is showing signs of stability to start accumulating.
Okay, all right. So that's the view on Amara Raja as well as Exide as well. Kumar from Chennai is joining us on the phone line. Kumar, good morning to you. And the question is about Ujjivan Small Finance Bank. Is that right?
Yeah, correct.
Go ahead. What do you want to know about it?
Yeah, so I bought this stock considering the tactical thing. Banking sector is at a valuable valuation is really nice. So I want to know what is the technical levels for the next 6 months to 1 year time period for Ujjivan, and it's also available near the book value. So that was the logic behind getting into the stock.
Understood. So your time frame is 1 year, correct?
Correct.
Okay, and are you planning to hold this, or are you planning to add more at this current price?
No, I'm planning to hold this.
Okay. So you've got 500 shares. Let me go across to Vaishali to get your technical view for Ujjivan Small Finance Bank for 1 year perspective. Bought at levels of 40, given up a little bit of ground from that point, now at 33. Vaishali, would you hold on?
I would personally say shift to the frontline good stocks like, in fact, Kotak Bank or HDFC or SBI, because those are really giving us a hard time, giving us good returns at this juncture. So I think can be a miss at these levels.
Okay, and HDFC Bank already has recovered, in fact. Ola Electric is the next counter that we're talking about. Ajit is asking about this. He's bought at elevated levels at 120 or thereabouts. He's got 1,000 shares. He's got a holding period that he anticipates will be about a year or so. Ground to recover, but is that possible on the charts? Vaishali, do you have enough data to talk about this?
Yes, quite a bit actually. I would say that the stock saw a good beating. 70 is the level where it has been showing a cluster of support. And today we are seeing an exceptionally high volume. So I guess very gradual. The near-term resistance would come at around 90 to 110. Above that, once again, we are ready to see 120. So I said now that if he's holding on for so long, continue holding.
Pradeep Kumar is joining in from Kerala, and he's asking about Cochin Shipyard. Pradeep, what was the reason why you bought into this counter? Is it fundamental? And you didn't like any of the other shipbuilders?
Good morning. First, I really appreciate you, NTTV. You guys giving really very, very helpful advice and everything. Thanks to you first.
Thank you so much, Pradeep.
And my question actually, I saw the last 4 days. In the Cochin Shipyard is going to most of the upper circuit.
Yes.
So I believe that's still going up. I don't know in the future. Of course, I believe positive thoughts in that about the Cochin Shipyard. And I have Masadok also. I keep in Masadok. Some PUC sector.
Okay.
And some another sector I have.
Okay, so Cochin Shipyard, I'm just curious, what do you want to know? Do you want to know whether to exit at this point? What is the time frame that you have in mind?
I don't really want to exit from the right position because I saw some, there is lots of fake news coming in the online media, and they say it's going to be 100% and Indian share markets, everything going to up soon. Yeah, I believe soon. But my question, is it the bearish trend is going up, Indian market? That's the first question. No, I mean, it's not question. The Cochin shipyard, what is the future?
Okay, got it. I got your question. Pradeep, thanks so much for your kind wishes and for talking to me this morning. Pleasure having you on the program. Vaishali, what's the view on this one? Because like he's pointed out, it's been gaining quite substantially. It's up and about in trade today as well. What are the charts indicating as to how far it can go right now?
I think all these stocks, as we mentioned just during the beginning of our talks, Cochin Shipyard, Mazgaon, they are all showing signs of revival once again. So I would say, well, continue holding. In near terms perspective, 1650 to 1700 can be the target. And if a longer term perspective, if time is not the problem, continue holding, you'll get much higher returns, because overall the trend has been very strong. We saw very good retracement and it's showing signs of reversal.
Okay, all right. NHPC, I want to take this very quickly. You've already given a view, Samir, on IDFC First Bank, and you're positive on that. It's your top mid-cap pick. So, Phanindra, you should know that Samir is very positive on this. But what's the view on NHPC? Would you suggest a fresh buy at this level?
Yeah, one could take a call and probably initiate, start accumulating it. We have seen a decent correction from the highs. It's a company that is into, again, renewable energy, but more on the hydropower side, which is also growing its capacity, which will of course take time. It's more capital intensive, more long-term gestation. They are also going to be doing some amount of solar power plants, and also it is a much smaller size compared to what an NTPC Power is. But I believe that this is a company also that will sit to grow. Operational efficiencies, profitability will increase. So one can make an investment with a target price of maybe 110 from a 1 year perspective.
Okay, I believe we've got Sanjay who's calling us from Gujarat. Sanjay, good morning to you and thanks so much for calling us. What can we help you with today?
Yes, I have Bank of Baroda from the COVID time.
Right.
And that my average purchase is 51.17 rupees. 51.17, 51.17.
Okay, understood. And so you are looking at holding this for the long term, and you just want to know whether or not you should do so, or whether you should book profit. Is that right?
No. I want to book partial profit or not at that time, but I want to hold the long term.
Long term. And you want to know whether this is the best investment to make, or whether there are other opportunities available.
Right. Best investment to stock hold or not.
Okay, understood. Samir, you've already given a view on quite a few of the banking names. Bank of Baroda bought during COVID time, so a substantial amount of gains being made here. It's phenomenal. I mean, I'm practically speechless. But would you say you should take some money off the table? Are there better opportunities, faster growth in the banking space?
So there is faster growth in the banking space in the private sector banks. We discussed IDFC. I told you IndusInd, HDFC remains my top pick in the large cap banking space from a long-term perspective. But should we sell Bank of Baroda? No, I don't think so. Look, it's trading at about 1x book value. The bank is growing. The deposit base is growing. I believe these PSU banks could probably look at a re-rating. We've seen a bit of a correction recently because of some amount of negative news flow, first of all, with the government coming. I mean, the government saying that insurance products should not be missold by these banks, which has been happening. So maybe that some amount of sales slows down there that could hurt in the near-term profitability. But eventually, I believe these are good businesses, strong businesses, which will grow. I say hold on to it. If you have additional capital, look at private banks. I think the growth will be faster, returns will be better, but this is a safe investment. We should continue to go. So hold on.
I believe we've got Arjit and Amit also on the phone line. Unfortunately, guys, we're completely out of time on this edition of Ask Profit. And hopefully what we've discussed so far with Samir as well as Vaishali is going to help you out. On that note, Samir and Vaishali, let me thank you. Thank you so much for taking the time and speaking to us as always on Ask Profit. Always a pleasure hosting you on this program. That brings us, as I said, to the end of this edition of Ask Profit. Do stay tuned. Lots more coming up over the course of the day. And this is NDTV Profit.
Laurus Labs has seen very aggressive fresh longs on Friday. It has given a very good breakout on intraday charts as well. Plus, there's an option chain breakout above 500 levels. So one can buy Laurus Labs on any small declines up to 510, keep a stop loss of 500, and a positional target of 535 to 540 can be seen.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the long street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators.